Oh, brother, oh, brother, oh, brother. Good morning, and welcome back to another episode of the Matt Kohrs Show, where I'm Matt, your Kohrs, and together we are going to pull this show off. Put on your luckiest of all trading Buffalo shirts, because today we might need it. Non-farm payrolls is coming out in a mere 5 minutes, which means we're going to get the last major data update before monetary policy is most likely going to be changed on September 17th. This is the big jobs number. Obviously, throughout the week, we've been getting various jobs numbers, and as of right now, they're a little bit weaker than anticipated, which in a certain sense is actually increasing the odds of a rate cut. But today is the important day. Today are the numbers you got to be paying attention to, which is exactly why we're starting early. And hey, why not? Why not a little bit more screen time when your hair looks this good, when you have on your favorite shirt, when it's a Friday, and in fact, it's a payday Friday. So if you haven't already, if you're in chat right now, help your boy out, smash that like button. Don't forget to turn on your notifications, and also get involved in the Payday Friday giveaway. It's 100% free. We're giving away 5 different Vanquish accounts and $150 of cold hard cash. So we're doing the giveaway. It's pinned to the top of chat. It's in the description of the video. It's super simple. Like, retweet, and follow the Twitter account. Bada bing, bada boom. Like, retweet, and follow. Not that hard. Like, retweet, and follow. Free to enter for everyone. Those 5 winners will all be getting a Vanquish account, and then we're going to take those 5 winners and we're going to put them in a marble race, and then that winner is going to be getting the $150 of cold hard cash. So free for everyone to enter in. Just go do that, and we'll be doing it a little bit later on today. But you might as well throw your hat into the arena, because why not? Who doesn't like some free shit? So with that being said, let me kind of actually hurry up and get you guys ready here. What is this? Letnick predicts better jobs number accuracy after Trump fired the BLS chief. Maybe. S&P 500 futures rise slightly ahead of the August jobs report. That is what we are all here for. So right now in pre-market trading, we're still above where we closed. I mean, yesterday was crazy. Starting at 10:15, we just ripped like no other. Post-market trading was kind of flat. Pre-market trading, we popped flat. Now coming back down to where we were, but overall, we are literally talking about record highs. So SPY looking good, Q's looking good, Avago. They had earnings last night, currently up 12.8%. Bitcoin's even having a bit of its own recovery. So across the board, the bulls are in control. And we are all waiting for this 8:30 report coming out now in 4 minutes. Treasury traders gear up for U.S. payrolls to cement the Fed bets. Bond and currency traders are bracing for Friday's U.S. unemployment rate, which stands to solidify views on the Federal Reserve's policy to determine the near-term trajectory of interest rates. So basically, this right here, non-farm payrolls, they're expecting 75,000. Unemployment rate, they're expecting 4.3%. Those are the lines in the sand. You don't want them to be too good that the Fed's like, we don't have to cut rates, but you don't want them to be so bad that the market's like, are we cutting rates because something is breaking underneath? You kind of want that Goldilocks zone of pretty much right at expectation, because if we can hit that, I am not just expecting a new all-time high. I'm expecting an overall multi-day, multi-week continuation to the upside, but obviously time will tell. Now, before we get that report, I just want to let you know, as of right now, according to Polymarket, there's an 88% chance of a 25 bips rate cut at the September 17th meeting. And according to Kalshi, there is an 85% chance. So we're pretty up there. And these odds, as you're about to see, as soon as this report comes out, you're going to see some bets hitting the tape. And basically, if we come out at expectation, I would expect the odds of these rate cuts really, really to shoot up. So something to pay attention to there. We'll come back to this. And once again, just for those of you who are curious, 75,000, unemployment rate of 4.3%. That is what the world is expecting. And I think if we can hit, once again, that kind of perfect Goldilocks zone, and if you come in a little bit later, if you need me to re-explain this, I'm more than happy to do so. But we don't want it to be too strong. We also don't want it to be too weak. If we can thread the eye of this needle, that's when I expect the market to really get popping on the day, which once again, we're not that far away from an all-time high. So should be pretty exciting. So here, let me go to the 15-second chart. Here's where we are. SPY currently trading at 649 and a little bit of change. And obviously, if you're on something like Apex and you're trying to pass a SIM to funded account, these are pretty solid opportunities to do so. It's not necessarily financially efficient, but it's definitely time efficient. These types of moves, especially like on something like NQ, has a big enough move that if you long half the contract, short the other half the contracts, or the accounts, I should say, that's exactly where you're going to easily be able to pass some of these tests. So if you're doing it, obviously, Godspeed. Is it a guaranteed thing? No, but it does work quite a bit, especially when you have such a hotly anticipated report such as the unemployment. So let's bring up our boy Rick Santilli so we can hear what's going on. And obviously, at this point, cast your bets. Are you guys betting bullish or are you betting bearish? Everyone, please cast your bets because we only have 15 seconds left. You have 15 seconds left. What is it going to be? Giant pop or giant drop? We are finding out soon. What is it? What is it? What is it? We are counting down. 5, 4, 3, 2, 1.
Right, you have to watch the unemployment.
Initial reaction up.
Number than we were traditionally used
down.
to getting could mean no
back
increases
down.
In the
both sides of the fraction. You could do 30.
What are the numbers?
No the unemployment rate.
Initial reaction up, then giving it back. 22,000 lower than expected. Unemployment rate 4.3. Honestly, this, and then we have a revision to the upside on the previous. I actually think this is going to be bullish now. A little bit weak, which is what the market could handle.
Good job, BLS. Change in non-farm payrolls for the August jobs report. 22,000. Interest rates started dropping long before this data was released. And last month, a subtle revision to 79,000. And if you look at the 2-month revision, thank goodness it's not minus 258,000 like it was last month.
1%.
Comes out to minus 21,000. Of everybody, of course, is trying to find out what's going on with the unemployment rate. We'll do that next.
I think this is going to end up being bullish, folks.
Comes in at comes in at 4.3. 4.3. So it moved higher. Now, here's something interesting. What's the comp? We haven't had a rate that high going all the way back to 2021 when it was 4.5. So you could see that the way it dropped really was quite incredible. We went from 4.2 to 4.5 in November-October period of 2021. Now let's go at average hourly earnings up 0.3, very solid, very much as expected. If we look at year over year, 3.7, losing some steam. 3.8 was expected. 3.9 was in the rearview mirror. So 3.7, that would definitely take us back also to mid-2021 to find a comp there. Yep. Hours worked. Many people are counting on this to give them some early clues, thinking
I think today's going to be a good
hours
day.
Are going to drop a bit before people potentially get fired. There's two ways to look at it. Maybe you give your remaining people more hours
we open up
before
here,
you
we're
hire
at a new
people.
all-time high.
I think it could go either way. It comes in at 34.2. That would be the second lowest of the year. We've had several. 34.1 is where we started the year. So 34.2, kind of figures right in there. And finally, let's look at some of the other numbers we like to pay very close attention to. If we look at the labor force participation rate, and this has not been a good thing. It really has been moving down. We were at 62.6 at the beginning of the year. We're now at 62.3. That's 1/10 better than expected, 1/10 better than the rearview mirror, equals where we were in June. To find a higher one, you have to go to May at 62.4. As I said, it's been steadily moving lower. And finally, we go from 4.3, which is known as U3, the unemployment rate, to U6, which is called the underemployment rate. That zoomed up here also to 8.1%. 8.1% would be the high of the year. Matter of fact, once again, where are we going to find a comp? We're going to the fall of 2021. Interest rates, when about 5 minutes in front of the number, we're hovering around 4.13 and a 10. They got down as low as what looks like on the chart, 4.09. We're currently hovering at 4.11. Maybe the best bit of information I could toss out there is we closed at 4.23 last week, and the low close of the year is like 3.9999. We'll call it 4%. That's what everyone's going to be watching, not only on an intraday basis, but more importantly on a closing basis. And once again, I don't care how soft the data is, debt and deficits may weigh in on if we can actually close under that very key level. Back to the panel.
Back to the panel.
Thank you very much, Rick. I'm going to jump to Steve in just a moment, but very quickly, Sarah, I want to get your reaction on the equities reaction
like I explained
to this.
before, this
Stocks
is going to be
actually went up on
interpreted as
this
bullish.
news, I guess,
I'd be really
because
surprised if it wasn't.
Bad news is good news now. It means the Fed is going to cut rates for sure this month. Is that your expectation based on what you're seeing here, too?
This gives the Fed the green light to cut by 25 basis points, and I think it's going to bring 50 basis points of rate cuts on the table for the September FOMC meeting, and that's why markets are positive. Not only is payrolls exhibiting a huge miss here, but average hourly earnings are not up more than markets expect. So I think they can get by with understanding that the employment market is cracking, and often if you wait too long while employment markets crack, it can lead to a recession. So they may preemptively do that 50 basis point rate cut, which is what we saw last September in 2024, because average hourly earnings are not too high. Now, the next data point we need to be concerned about is CPI next week. If that number comes in not too hot, I think you're going to get 25 or 50 in September, and that's 50. Why equity markets are rallying.
That's when we're going to get real saucy.
What are you drawn to here?
If we get low inflation and we get a 50 bips rate cut?
Well, I am looking at that.
Remember, new Fed governor?
Not much trade at the moment on the 50 basis point trade, 0.4% probability. It's 100%. What has happened, however, is a big change to thinking about October.
Dude,
October
we're starting to talk about a 50
and if you'll give me a second, I'll tell you
team.
what it was just before the number. It was 61%.
It just jumped up.
20%
We're seeing some life right here in the 50 bips.
Trade for an October.
It went from 7% to now 11.
Right, but
not
then I
much,
want to see whether or not they're now
baking in.
People are starting to bet on a
50 bips.
Yes. Okay.
Look at that.
So here's where we're at now. We're now thinking about 3
up to
cuts
12%. We're seeing a little bit of life in people betting on a 50 bips rate cut.
Point. Now,
do they have 4 meetings left? September.
There's only 3 left.
There's only 3 left. So
every meeting now is now believed to be the case. That is the trade. Okay. We'll see a lot. As Rick has always pointed out, a lot of noise right after the number comes up. We'll see how it settles down.
September, October, December. Are those the 3 meetings?
September, October, December. Yes, correct. Okay. So private 38. Okay, because here's what's happening. a steady drumbeat of job losses at the federal government level. You can say this is extreme, or you can say the data kind of supports this.
Dude,
we're
Captain
getting back
Condor
to a place we were before the
today.
pandemic, right? There was a pretty good surge under the Biden administration, so we're bringing that back down, at least the federal government level. It's I have that number now. I just calculated it. 88,000 jobs lost in the federal government ex-Postal Service since the beginning of the year. 88,000. Okay. What other numbers are interesting to me? Manufacturing minus 12. And there's been a steady drumbeat of losses in the manufacturing sector. I think one of the warning signs here is these tariffs, which are sort of designed to help manufacturing, could be hurting manufacturing because of a rise in input prices in the manufacturing sector, as well as a potential slowdown in the economy. Good sector overall, minus 25. Private education, healthcare, 46. And then one other number here, goods overall. I wanted to just check one other thing, which was the professional and business services, minus 17. A lot of minus signs here is all I can tell you. I did want to check health and leisure and hospitality, up 28. So that's okay. The big story, I think, is this debate, and I'm fascinated with what Allison and Betsy have to say about this. You're now down to, and I'll give you this number here, a 3-month moving average of something like 23,000 average payroll growth over the last 3 months.
Holy shit.
Over that time period, you've ticked up the unemployment rate by 0.2.
We're going to open at a new all-time high.
That 20,000, or let's call it 38,000 right now, could be close to the right run rate if you include the decline of immigration, an increase in deportations, the break-even rate. Maybe it's 50, maybe it's 60, but it's not far off
649,
where we are right
48.
now. If this is the policy you want, then that's the policy you get. The big caveat to everything I've said here, August is a terribly noisy number. We keep revising it. I don't know exactly why. It may be because it's a shoulder month on the education side. Got to get to the panel, but it's just a number that is often revised.
See what these brainiacs on the panel have to say.
And it's often a number that the street misses. I'll leave it there.
All right, Betsy, why don't you weigh in on
6508.
some of these questions that Steve just raised?
We're currently at 6519. We are literally gapping up to a new all-time
level
high
for the employment market at this point.
So let's start with that. August is a terrible month. It's true historically, August gets revised up. Although the BLS seems to have wrapped their head around that in recent years because it's actually been revised down over the last 2 or 3 years. So I don't know how much weight to put on the revisions. My guess is the reason it's a terrible month is everybody's on vacation and then they're trying to get their kids back to school. And so employers are just late sending their payroll data in. I do think we're at a slower, steady state. I don't know. I think the problem is we don't have enough data to know. Is a good number 50? Is it 38? Is it 70? It's definitely lower because we're losing, foreign-born workers, and that is having an impact. And it's not just having an impact on losing those workers, but that is a rising input cost for a lot of companies. And so then they don't have to hire other American workers, right? The research shows that it's not all substitution, some of it's complements. The last thing I really wanted to highlight is what Steve was already saying, which is what we're seeing here is positive growth in services and negative growth in the goods producing sector. That's construction and manufacturing. These policies are not helping
putting in a higher low,
down in dirty jobs.
Doesn't want to break
We're
this.
still seeing the service sector driving the economy. The most worrying thing in the numbers, though, is that it was a decline. The decline in business and professional services that Steve highlighted is coming from temporary health services and HR services. So it does look like companies are thinking we need fewer employees.
Allison, you want to weigh in on this? How are you reading these numbers in terms of what it says about the economy?
I mean, there's no doubt the labor market is weakening, but I still don't think this is a bad labor market. I mean, Steve made a good point that we can rely less on the payroll number and more on the ratios. And 4.3 unemployment, pretty steady labor force participation. This isn't bad. It does really look more like the labor market pre-COVID. So I think there's a lot of motivated reasoning from markets right now anticipating all of these big rate cuts, because with where inflation it is, and certainly where the stock market is, this is still not an economy that looks like it's sliding into recession. In fact, booms very rarely die of old age or just a slowly weakening labor market. They die of some external shock usually. And, I think this is just the least popular boom we've ever had, which we always just assumed would end horribly. So, we might get these rate cuts, mainly more for political reasons, maybe just for some sort of pressure. But this isn't, to me, a bad labor market. It's just one that's a lot less hot than it was a couple of years ago.
All right, Rick, what are you thinking about this? I know you want to jump in here.
Well, I think the points she just made are excellent, and that's really where I wanted to go, is that if you look at pre-COVID as some sort of baseline for these numbers and the distortions that have happened since, whether it was because of injections of funds, the jump in inflation, we all know the issues. So if you look at an unemployment rate of 4.3, that isn't so bad when you look at it historically.
Bonds are going up, yields are dropping
hours
still.
Worked,
oil,
even the
chilling,
3.7,
gold,
which is
new
to me the most
all-time
disturbing part
VIX
of the data today on
again.
the average hourly earnings on a year-over-year basis.
Jesus.
But that's still 0.3 higher than what we were doing the first couple of months of 2020.
CRM
so
upside gap.
The way I look at it is we've now become kind of a no hire, no fire economy. We're not seeing a huge amount of job creation. But to take that and think that we're going to put the economy in reverse and hit the gas, I don't think we're going there. So I think that the path that Fed Fund futures seem to be outlining with the 3 meetings of potentially hot for the following 2. We know SEP is for sure hot, and we can know the white noise may disappear. But ultimately, I think we're getting back to some sort of normal, and the market's going to have to grapple with, can the equity prices remain at these levels? Is the air too thin? There's going to be potentially some rejiggering in the economy, but I completely disagree with the notion that the labor market is really going to be suffering. I just think it's getting back to something more sustainable.
Let me ask Sarah about that from the equities perspective on these things.
We're all excited,
Sarah, not
Rick,
all rate
but Jesus,
are
calm
equal.
down.
If you're getting Fed rate cuts because inflation you think is tame and you've got the room and ability to go ahead and do this and be a little more accommodative, that's great news for markets. If it's because the labor market is weakening and you're trying to stop it from falling into different disarray, that's a slightly different reason for a rate cut. How do you read the potential for these rate cuts? Are they good, bad, concerning?
Well, 2 points for what would drive equity markets for the U.S. Number one, what we need to focus on is technology stocks.
He did say the
tech
hard R.
Tech stocks have driven about 2/3 of earnings growth. So whether tech stocks can continue to grow at this rate and AI demand remains in place is going to be important. Second, I wanted to comment on what tends to cause the end of an economic cycle. While in recent history, it's been exogenous factors like COVID and the global financial crisis, we have seen occurrences where booms do end because of old age. So seeing this labor market continue to slow and perhaps the economy and manufacturing continue to slow, I think is an issue that the Fed needs to pay attention to, because that could eventually drive us into a recession. And what the markets will focus on with the Fed and FOMC meeting is going to be not only the degree of rate cuts in September, but what is the commentary around the pace going forward. If we only get a 25 basis points cut in September, I think the market will sell on the news in terms of that. But if we can get information on the pace and series of rate cuts going forward, the markets may become more optimistic. And finally, let's not forget about the bond market and the 10-year. The slope of the yield curve has been concerning for equity markets recently. It's good to see that number start to moderate, but watching that 10-year yield in terms of, is it going to continue to moderate, that's going to be important for what equities do going forward.
I want to make a couple points, which is, first of all, Allison was talking about some of the ratios out there. Actually tick up in the participation rate. That's a good sign. The idea about temporary help, which Betsy made, I think is important. That can be a leading indicator of negativity. But also the employment to population ratio, another ratio that Fed officials are going to watch more because of the uncertainty about what the right payroll break-even rate is, also was steady. The increase in the unemployment rate looks to be, and I want to get some hate mail here because I'm sure I will, it looks like it's specifically very concentrated in African-American areas. And that's been an issue.
Dude,
and it's especially
talking about
African-Americans
and we're rejiggering.
Relative to white women, which has been very steady. Up
White
a tick,
women?
About 0.3 on the African-American unemployment rate. It's something we want to watch carefully. It could be an effect of federal government layoffs. We know there's some concentration there. But also it's one of those things where sometimes it's the last in, first out situation where they benefited from a strong job market before and they were the last hired. They may be the first out. It's something to watch. It's an issue that maybe
where are all the white
worth,
women at?
Some discussion at some point.
Allison, Betsy, very quick. Either of you have a thought on that?
Yeah, I just want to say that first, I think booms never, ever end of old age, but we've been ignoring the shock here. There is a shock that has been a rise in input prices for businesses. And the question is that enough to weaken us into recession? We're clearly a weaker labor market. And that's why you're seeing those leading indicators like rising unemployment for African-American women. That's a leading indicator, just like temporary help.
Allison, last word.
Yeah, I mean, I think what Steve brings up might come up in the framework review, because in the last one, there was more of a move to think about using monetary policy for more inclusive employment. And that was controversial, not that inclusive employment isn't important, but is monetary policy the best tool to deal with that? So I think these numbers might now become much more important in this discussion and become more central in the framework review.
Allison, Betsy, Sarah.
I forgot to mention
Rick,
also a rise
Steve.
in the Hispanic unemployment rate as well. I didn't get a chance to look at that, but that's something worth looking at too.
Okay, thanks to our panel.
Lot to chew on. Okay, coming up next, former Fed Vice Chair Roger Ferguson. We always go to him to try to find out what he thinks of these numbers and what it could mean for the Fed.
We're not listening to that, right. Nerd. All right, folks. Let me explain something to you. Let me explain why in the world your boy's stoked. Well, first of all, for the past couple of days, I was being a dipshit. I was holding on to puts for no reason, to the point that my own Discord had to have an intervention with me yesterday. They sat me down and they said, Matt, we fear you might have recently hit your head. We fear that you might have been hitting the bottle a little too hard. We fear that perhaps you have late onset fetal alcohol syndrome because you continue to hold these puts in the face of all this positive data. And I had to sit there. I had to stew in that all night. Matt, did you hit your head? Matt, have you been hitting drugs and alcohol too hard? Do you have some sort of late onset brain deformity that maybe you should get a doctor to check out? And I sat there and I said, you know what? You got to fix it. It's time you take a stand against your own potential retardation. So I did what any man would do, and I cut all my puts. I YOLO'd it into a bunch of calls, and it seems to be working out right now. So I'm pretty stoked about that. I'm actually really, really, really stoked about that one. So thus far, it's actually, I'm up thousands of dollars. That's pretty sick, actually. Yeah, I have some SPX calls. Actually, I have way too many SPX calls across all my accounts. I'm just looking at some of these numbers right now, and they're actually pretty sick. So anyway, why is this happening? Beyond my own recent financial misfortune, which I'm parlaying into recent financial success, what in the world is going on? Folks, it is this simple. The Fed has a dual mandate. Mandate number one, price stability. Keep the U.S. economy on track for a longer-term 2% inflation. That is our long-term target. That is mandate number one. Mandate number two is don't let our job market go to shit. A lot of the times, these things are at odds with each other. If the job market is weak, you want to stimulate it, but that generally prompts inflation. When you have inflation that's too high, you try to bring it back down, and that generally hurts the job market. A lot of the times, they are at odds with each other. Recently, over the past couple of years, due to the trillions of dollars that the Fed has printed, well, that generically causes inflation. We've been fighting said inflation. And for the longest time, we had a very strong job market, and it could take the beating as we were trying to lower inflation. Recently, we've brought inflation down from 9% all the way to 3%, which technically is off our 2% target, but we're starting to see some signs of potential weakening in the job market. And the question here is okay, because we jacked up the Fed fund rate to 4.25% to fight inflation, can we calm it down a little bit where we're still ideally fighting inflation, but maybe not so aggressively beating up the job market? That's the general thought. Of course, there's a lot of nuances, and we could talk for hours about this, but I'm just giving you the overall general vibe. So this is the argument now of like, okay, is inflation low enough and the job market weakening enough, as in going the wrong way, that we could actually get this rate cut? Recently, we've been getting some data Wednesday, Thursday, and actually as of today, that the job market is either at expectation or slightly weak. The fact that we are slightly weak is kind of putting us into what I refer to as that Goldilocks range where, yeah, we're going to be getting the rate cut, but we're getting the rate cut for the best reason. So historically, if you look at all these periods really from the 50s, 60s until now, you're going to realize that for a long pause period, when we get the first rate cut, yes, if you ask ChatGPT, if you read whatever accounts, you're going to realize it kind of averages out to nothing. If you say, hey, how does the market react after rate cuts? It's going to basically say nothing. But what's interesting, and not to get too nerdy on you, we have some statisticians in the audience, but it's a bimodal distribution, as in it averages out to nothing, but we have two clear groups. Another thing that's a bimodal distribution is I could say the average human has one fallopian tube. It's statistically accurate. Half guys, half girls, and it's roughly going to be we have one fallopian tube. But in reality, it has a bimodal distribution. We have a big group of people with two fallopian tubes, and we have a big group of people with no fallopian tubes. So that's some of the times where the average and the median can kind of mess you up because you're just seeing two different cohorts. Like, I think that makes sense. So anyway, the economy also, you could say, has one fallopian tube. But in reality, when you dive into the data related to our economy and the stock market and specifically how it reacts to the first rate cut, you're going to realize that sometimes it has two fallopian tubes and sometimes it has zero fallopian tubes. And when you're diving into this fallopian tube discussion, you want to realize what's the difference. Why does it sometimes break to two fallopian tubes and the market rips to the upside? And other times, why does it have no fallopian tubes and it goes to the downside? You're going to realize that the major separating factor there is the market's perception of why we're getting the rate cut. Sometimes with no fallopian tubes, you're going to realize the rate cut is because it's perceived by the market that the economy is breaking at a more severe, faster rate than was lit on. The Fed has access to all this fancy data, and it's kind of looked as like a telegraph move of something bad is going on, and they're now trying to front run it to make sure we don't go into a recession or even worse. The other times where we have two fallopian tubes and the market absolutely rips is because it is viewed as, okay, the Fed has pulled off what they are setting out to pull off, and it's time for things to kind of return to an equilibrium where they don't have to be so aggressive, and it's basically in one way or another perceived that they beat their battle of inflation, and it's time to let the economy grow a little bit. So this time around, going into this September FOMC meeting, once again, September 17th, mark your calendar, do whatever you need to, but this September meeting, the perception is something along the lines of, well, as of right now, we could see the market at new all-time highs, that we're in the two fallopian tube case where, whoa, they beat inflation and it's time to kind of let the job market once again grow, or not necessarily spurring growth, but not necessarily pushing against it anymore. So it's really market perception. And that's why earlier on this show, I was saying, okay, we want the numbers to be weak because you want to have some sort of impetus beyond the administration to cut these rates. Like, that's important. But you don't want it to be so weak that we go into the no fallopian tube case where they're like, uh-oh, we've actually broken something. So I hope that makes sense. And obviously, I don't know if you have to be really at this point a doctor and a statistician to understand, or at least a biologist, this particular breakdown of the economy. But I think it makes sense. At least it makes sense in my mind. And if I lost you at some point along the way, don't worry about it. When I was growing up in 10th grade, my vice principal told me I'd amount to nothing anyway. So that is basically, it truly is the base expectation. So I think that makes sense. And if it doesn't make sense, probably you're the problem and I'm not the problem. So anyway, why are we popping right now? Well, we're slightly weak, putting that pressure on the Fed to cut rates. But today's numbers coming at the right unemployment rate, and then the numbers, which, I don't know, maybe the new BLS is kind of screwing with them. We're actually starting to see a slight increase in the chance of a 50 bips rate cut, which is going to get real interesting and actually might uniquely benefit, let me show you right here, might end up uniquely benefiting the small cap sector, which is perceived to benefit from cheaper money, cheaper capital, And we actually, this might be the push that sends small cap to a new all-time high. The last time we hit this was November of 24. And even though recently the SPY has hit a new all-time high, the Qs have hit a new all-time, and we're battling it out at those levels. The Russell has not. But this might be that exact ingredient that we need. And you're kind of seeing it in the betting markets right here. We've actually, this morning, we've shot from 87% up to a 90% chance of a 25 bips rate cut, but now 50 bips, that's also showing a little bit of life. Is it statistically likely? No, but you're once again getting the idea of the market's perception. According to Call Sheet, 88%, and then it doesn't even have odds of a 50 bips maintain or more. Okay, it's 9% right here. So that's basically counting 50 bips. So interesting movement already today and really going into this whole week. And you can see it with a little bit finer detail. This is the past hours movement. You could see a little bit of a shift here. So kind of cool to watch this all in real time. Of course, I'll be breaking down all the levels and stuff for day trading and scalp trading, but that's kind of like the holistic picture of what in the world is going on. I hope that makes sense. Obviously, before I move on, I'm going to answer any questions. So if you have any questions of what this is, please ask away. And in the meantime, don't forget that it's not just a Friday. It is a payday Friday. We are giving away 5 Vanquish accounts. All you have to do is like, retweet, and follow. The 5 people who are randomly selected will also be put into a marble race for $150 of cold hard cash. So obviously, if you want a Vanquish account, this is a sim to funded prop company, but this is for options. I know a lot of people are trading it with futures right now, but options are actually more popular. So if you end up wanting to do this, remember code Goonie will get you 50% off. There's no activation fee and 1 free evaluation reset. So we're giving away 5 of these accounts. We're doing the marble race, but I just wanted to call that out. And then also a little bit of a specialty thing today. This is the final push from Public. I know many of you watching right now are on Public. This is the final push where you can win the ultimate racing weekend in Vegas. So if I have any F1 fans, if I have any Drive to Survive fans, you can enter here. Public and Aston Martin have teamed up to give away the ultimate weekend in Las Vegas, VIP hospitality, meet and greets, basically everything. All you have to do is obviously have a Public account. I believe you have to have a minimum of $500, and you have to find the 3 cars within the app. And I basically reached out to them and I said, hey, can you give the audience a little bit of a hint? So you might want to write this down. I'll give you a second to get a pen, paper, but for everyone on Public, and obviously if you're not on Public yet, go sign up and just put in $500 because you can win this. But for those of you who want a little bit of some tips of where they might be, and I could repeat this later. So number 1, you might want to look into a little section called investment plans. Remember, you're trying to find 3 of these within the app. Number 2, there's a little fancy smancy AI system called Alpha. You might want to see what that guy has to say about Aston Martin. And number 3, speaking of Aston Martin, you guys might know that it actually trades under its own ticker, ARGGY. That might be another thing for you guys to look into. So anyway, check this out. This is kind of their final push for this big. Obviously, they are now a sponsor of Aston Martin. They're doing a giant giveaway in Vegas. Recommend you guys all check it out. Like, why not? Why not? Why not? F1 fans, Aston Martin fans, Drive to Survive fans. Hey, if you just like a weekend in Vegas, check that out. But feel free to rewind this. But you want to find 3 of those investment plans. You might want to talk to their AI system, ask it about Aston Martin, or you might want to look at the Aston Martin ticker itself, ARGGY. So make sure to check that out. And other than that, I should probably prep you guys up for the rest of today. Well, we have some time. I guess it's only 9 a.m. That is like one of the joys of us. Oh, fuck, dude. Holy shit, that is going. That is going. Okay, before I get into some of the nitty-gritty details of other things going on, do you guys have any questions whatsoever about what just happened and why it's perceived to being bullish? Like, are we all on the same page there? Because if so, I then want to get into the key levels and really how one Discord is about to be blowing the fuck out. There's Discord that got very popular because of Wall Street Bets, and basically they sold a bunch of premium, and clearly they are now going on tilt. They just blew out the past 2 days in a row, and today's going to be the third day, and they're going to literally be losing millions and millions and millions of dollars. So that could be interesting. Someone's asking about Open. We can look into it, but remember, my opinion on Open hasn't changed. It's a pump and dump. You can make money on the pump and on the dump, but it's not an investment. It's not a play that you get married to. You buy it and you move on with your life. It's not one of those. It is an active trade where if you go up a decent amount of money, set your stop at break even. You have a lottery ticket. If it rides, it rides. Congrats to you. But if you look at how the stock is behaving and why it's behaving the way it is a very classic socially engineered retail trading pump and dump. I've seen many before. We're going to see many in the future. There's nothing new under the sun. This isn't special really in any manner whatsoever. But that's what it is. So if you're in it, you're up a decent amount, set your stop to break even and ride it as far as you can. Like you don't have to make it that like complicated. Wouldn't this just prolong the bad things to come? I don't quite know what you mean by the bad things to come. Prolong the bad things to come. I guess I need a little bit more info there. Do you think we see a 50 bips rate cut? I could give you the odds of it. It's 10%. So as of right now, it's pretty much a 90% chance that we get a 25 bips rate cut and a 10% chance that we get a 50 bips rate cut. So those are the odds. That's literally what we're seeing the market betting on right now. The next thing that might have a bit of influence is the upcoming CPI report next week. But right now, if I had to guess, I would literally go with just what the market is telling us of a 25 bips rate cut at that September 17th. The market is pretty sure of that. There would have to be a shocking piece of news for the bets to be readjusted and make it more likely that it's 50 bips. So is it possible? Yeah, I'm giving you the odds, 10%, but 90% is pretty strong. Inflation, etc., possible market crash or recession. You're just saying scary big words, but like you need to have like, but what are you talking about? Remember, the Fed is not here with inflation. The Fed fund rate is still elevated. That is still them saying we're fighting inflation. They're just not fighting it as aggressively as they were before. Instead of being at 4.25%, they're going to come down to 4%. Still fighting inflation. But right here, this is them attempting to not push us into a recession. They don't want to crash the labor market. It's basically like I'm kind of confused because this move is them saying, hey, we're still fighting inflation, just not as aggressively as before because we're being mindful of the job market and we don't want to send the world into a recession or specifically the U.S. stock market into a recession. So if anything, I would argue that these actions and the market's reaction to it, the market is signaling to us that they think the Fed's making the right move. And it's also actually signaling that really you should be in assets, potentially hard assets, because inflation is going to be high. For the people who are going to get screwed in this are people sitting in cash because your dollar is going to get massively devalued. It's already been devalued. You can see equities are running up. You can see commodities are running up. The people who are really getting screwed in this are people who don't have asset investments because the US dollar is going to continue to lose purchasing power. I was just reading a stat over the past year or two. I think the dollar has lost 15% of its purchasing power. So basically, for those of you sitting in cash, like if you're just sitting in it and you don't have like a high yield account, this, that, or the other thing, you're losing purchasing power. So as much as whatever 10K might look like 10K in your bank account, what it could actually buy you in this world is getting less and less and less. So in a certain way, the market going up the way it is actually that's just the constant because of inflation. So that's part of the reason why we're ripping as well, is because inflation is still here and it's about 50% more than it should be. We're sitting at 3%. They want it at 2%. But right now, as we've heard from the Fed, specifically Jerome Powell, they're saying that the risks, remember, with the dual mandate, they're at odds at each other. So they're always weighing out which one is currently a bigger risk. And the most recent conversations from Jerome Powell have been suggesting that the risks are shifting from inflation to the job market, which is saying, okay, we're going to cut rates, which is going to make money a little bit cheaper, which is not necessarily going to help with the battle against inflation as much as it was. And that's why we're seeing things pump, and the dollar get completely devalued. And that's why we're also seeing things such as gold rip to new all-time highs, because it is very clearly being viewed as a safe haven asset. Safe haven asset. I missed the Wall Street Bets Discord thing. What happened? I have no clue what you're talking about. How does the job revision stuff work? Any idea? Yeah, so basically every single month they reach out to a cohort of people and they ask them about jobs. Are they employed? Or they reach out to employers and ask them how many people they're employing. But at first, not everyone responds. So they basically have this window, and when they collect the data, like they have to report it on a certain day. And it's reported, but then by the time you get to the next one, some of the people who didn't respond the first time around start to give you your information. So you just get more statistically accurate info as more time progresses, because ideally the cohort of people who you asked, or do you have a job? Are you employing people? And all that information, more and more and more start to respond. So it's a really stupid process. If you actually look into how the BLS works, it's actually shocking how stupid and archaic it is. But that's the general gist of why it gets revised, is because more and more people end up, I guess, getting back to it. You literally just mentioned it. When did I ever talk about the Wall Street Bets Discord? Ever? Does Wall Street Bets even have a Discord? Are you talking about when I said the Captain Condor Discord? That's very interesting that you think I literally just mentioned. If you can go back in this video and find one single time I said the Wall Street Bets Discord, I will give you $5,000. Actually, I'd give you any amount of money, because I know I didn't say it, because I didn't even know until this moment that the Wall Street Bets Discord was even a thing at all. I'm talking about Captain Condor, which to my knowledge has nothing to do with Wall Street Bets. Maybe it does, maybe it doesn't, but literally this is the first I've ever heard of an alleged Wall Street Bets Discord. I'm talking about Captain Condor, which is this independent group out of Vegas that is getting blown out, but those are two different things. You said a Discord from Wall Street Bets. I don't think I've said Wall Street Bets once in this entire stream. Captain Condor is a Discord, but I don't believe that they are from Wall Street Bets. Maybe some of the members engage in Wall Street Bets, but it's a different group. But anyway, yeah, it's just a Discord that has some serious money, and apparently they're not that good at trading. I said Wall Street Journal because that's where they blew up. The guy was he was featured in Wall Street Journal, and then that ended up becoming a big marketing tool for him. And a lot of people signed up. So the money behind these bets got bigger and bigger and bigger because of being featured, once again, not Wall Street Bets, Wall Street Journal. So Wall Street Journal is the thing. Wall Street Bets is the thing. This Discord's the thing. And actually, I could show you. This is actually crazy. They're completely on tilt. So over the past couple of days, let me show you how this has played out. Let me tell you a little bit of a story. Let's go back to Wednesday the 3rd. You can see right here, 9:30 in the morning. Okay, this is Wednesday. We're rewinding the clock 2 days right here. 6445. And then you also have 6375. They wanted to close here. And also, please pay attention to the size, 10,000. So if you fast forward to like the middle of the day, I want to see what the max size was. So someone threw bigger plays on top. It got up a little bit bigger. That was 20,000. But the point is at the end of the day, you can see where we closed. The player got blown out. So once again, 9:30. They want it below 6445. If you fast forward to the end of the day, let me go back to 4 p.m. Let me go back to right here. It ended up closing above 6445. That player got blown out on Wednesday. Fast forward one more day to Thursday. Let's go to 9:30 in the morning. Do I need to fast forward a little? Well, you could see Captain Condor right there. 6475. Maybe I need to zoom in just to make it a little bit more clear. Oh, I went in too far. This is, once again, yesterday. 6475. They don't want that to get blown out. Fast forward to the end of the day. Guess who got blown out? 6475. So for 2 days in a row, this Captain Condor, which, once again, to be very clear, just so we're all on the same page, this is not a Wall Street hedge fund or anything like that. It is a Discord room, a trading room that got big because of its feature in the Wall Street Journal. And actually, it was really, really smart marketing, where the guy getting interviewed, who once again does not have some like storied history in the world of Wall Street. He's not some sort of quant trader. It's literally just a dipshit Discord where they use a martingale technique. They iron condor it, and if they get blown out that day, they double down the next day. If they get blown out, they double down again. So maybe you've played roulette with that, where you bet 10, then 20, then 40, then 80, then 160, then 320, something like that. So now for 2 days in a row, and like obviously once again here, I'll show you the size. This got bigger. This got up to 12, but then by midday, you can see it grew to 15, and then there was another one on top on 18. But what was crazy about this one, this was at 6495. Yesterday, that one blew out too. They both blew out, which then brings us to today. So you're at, like, in real time, you're seeing the martingale and you're seeing them on tilt. Like, it's actually getting crazy. Right here, 6535, but look at the size, 49,000. 49,000 blown out on Wednesday, blown out on Thursday, and right now sweating like no other. Dude, do you know how many millions of dollars are gonna be lost on this trade if it pushes 6535? Like, this is crazy. 49,000. I mean, just I'm trying to think. What would the risk be here? Let's say 449,000. It's risking roughly $19.5 million, roughly. So let's even be nice. This is about, if this gets blown out, it's about a $15 million loss on top of what was already lost on Wednesday and on Thursday. How, like, this, we are literally in real time watching a Discord of retail traders get completely tilted, completely blow out, completely just lose their shit. And that's the thing with the martingale strategy, is it works as long as you're capitalized. And then if you if you don't have the money, dude, you're gone. Like, it can just one bad run and then you get completely screwed. So yeah, it's another marketing gimmick bullshit. They're not advanced players by the fact that this is probably the third day in the row they're going to get blown out. And for the owner of the Discord, good, fuck them. Like, but for all the people who just arbitrarily followed him thinking he knows what he's talking about, of course I feel bad for him. Like, that's crazy. This, if either of these sides get blown, if the market closes above 6535 or below 6455, at least 15 million gone. Just like the market makers keep it. Thanos snapped like out of existence. How nuts is that? How freaking nuts is that? That's so much money, and there's a very good shot of it happening, which is exactly why I have it marked out right here. Obviously, the market opens in 15 minutes, but basically this white box is our transition zone, and the transition zone is created because of Captain Condor. It's 6455 on the bottom, 6535 on top, right here, 6535, 6455. That's our transition zone. Obviously, we have quite a bit of support, technical, open interest, and psychological level at 6,500. If we could hold that support, I'm looking for the test of 6535. There's a little bit of open interest at 6550, but really we actually have a reach target today of 6575. That's the bull case scenario. The bear case scenario is 6,500 doesn't hold. We puke to 6470. The reason I'm talking about that is we do have some bets down in that region roughly. So a little bit of an open interest there. And then obviously we have the bottom of Captain Condor. And then from that, we have this puke zone at 6.4, I don't know, 15, 20, somewhere in that zone. So obviously this latter scenario would be the bear case. The former would be the bull case. Basically, I'm only looking to play the bull case today. Of course, this might be a downside gap fill, like stuff like that could happen. And yeah, maybe people just choose to take their profits. Maybe they're worried about the Vanna or Charm flows coming in on Monday. But overall, based on the data that we currently have, I know that the options market is call dominated. I know that the Captain Condor group, like, I think that they have a serious target on their back, because what happens when this gets blown out, when you sell all these calls at this, you have to think about the delta influence. This has more delta than this one because it was closer in price. So they sold all of this delta bought this delta, so it is a net negative delta play. If they get blown out, then we have positive delta, which is seen by things like this ripping, like the delta is going to go up. So I think that there's going to be shrewd players out there, like not just retail, but like actual Wall Street players looking to test these positions because they know if they can trigger these guys to close, we get an easy shot up to the next level, which once again has a bet of 14,000. People are playing with serious money today. Before some of these days where I'm like, guys, like it's probably going to be a quiet day. Like we just aren't seeing much going on. Today is the opposite. Today is the opposite where you got to kind of be like paying attention and really on your game today because not every market day is going to be built the same. And today is one of those days where no, like set up, like, of course, maybe it ends up being nothing. Maybe Captain Condor wins. Maybe we go all the way up. It gets rejected. We puke and we settle around 6,500 and we all go to the weekend. Yes, that is a possibility. But what's also a possibility is for a third day in the row, this player is taken out either on the top or bottom side and we get some legitimate movement, So those are obviously, if you want, feel free to screenshot this. These are all the key levels in my humble opinion of the day. I gave you the bull case. I gave you the bear case. I'm looking for the breakout of this white box, which is the transition zone. And then obviously I labeled my targets. And really, we are talking about a new all-time high today. We are like, that is the realm we are talking in for the S&P 500. On the NASDAQ, we're a little bit too far away. I mean, I guess technically it's possible. What kind of percentage from here? We need we might see an all-time high. Like it's not out of question. I mean, from this point, we'd have to go up another 0.7%, which means from open to now, it would have to be a 1.6%. So it would be a stretch, but it's totally possible. I also would love to point out the fact that we have a nice, beautiful technical breakout. Higher highs, higher lows, equal lows right here, and then we push it. That is a classic bull flag breakout. If you took advantage of that, obviously, congrats to you, but the NASDAQ is looking strong. And then I should also point out RTY will do it right here just so you can see what's going on in futures. The small cap sector does have a bit more distance to go, 6% to the all-time high. Don't think that one's going to be happening today. But once again, a nice technical breakout, higher highs, higher lows. It swept all of these highs back from January and February of this year, and it's getting up to its next round of like a fight, the next like weight class to really get involved in. So across the board, the SPY is looking good, new all-time high. NASDAQ, it's in the cards today. We need a bit more of a strong push, and that actually could very easily happen if Captain Condor gets blown out. And then last but not least, you have the small cap sector, which is looking solid. Not going to hit an all-time high today unless we have one of the most historic days ever, a 6% gain, but uniquely will probably set up from cheaper capital, which is going to happen when the Fed fund rate drops. And then the other one, just because we're here, we might as well talk about it. Where's Bitcoin? Bitcoin potentially putting in an inverted shoulder, head, shoulder. Right here, shoulder, the other shoulder, here's the head, looking to snap the neckline. If you were to do a measured move on this one, fib retracement, what would that be? Do I do it this way? Yeah. Fib retracement. So you'd be looking a one-to-one measured move for the neckline snap from the head. You'd be looking for just under 120,000. So there is also opportunity in Bitcoin if that's what you are interested in. So if you're just joining right now, why everything is so stoked this morning is because we got a slightly less than expected, a weaker jobs report, but not so weak that people got concerned. So basically this is solidifying the deal that we're going to get a 25 bips rate cut, maybe a 50 bips rate cut, but honestly, most likely a 25 bips rate cut. So on top of this, remember, there's other drama going on. Trump is making strides in his takeover of the Fed. White House official Murin would consider keeping his job while serving on Fed board in unprecedented arrangement. So before this, the Fed always prided itself on being non-political. And right now it is making a very clear, concerted effort to be political. We have a new Fed governor who is basically saying, yeah, I'm going to be Fed governor and I'm going to hold my position in the administration. No matter how you cut this up, this is the Fed is very much being political. You might like that, you might not like that. It just is what it is, and you could come up with your own opinion of if it's good or not. DOJ opens criminal investigation if Fed's Cook issues subpoenas. So this is the whole mortgage fraud thing, and Depending on how this goes, I think if in a legal case they find her guilty, great, kick her out. I don't think someone committing mortgage fraud should be a Fed governor. Call me old-fashioned, but that's how I feel. But if in a criminal case or a legal case, if she is found to be innocent, I think she should be able to keep her job. I would say let the legal system play out there. Don't forget, we are in, well, no, we're actually not in earnings season. That doesn't matter. But I do want to talk about Broadcom, which is actually doing amazing this morning. And it's part of the reason why NVIDIA is not. So Broadcom, look at these numbers. It is gapping up 15%. It closed out the day at 306, currently trading at 351. This is the world's biggest semiconductor, second biggest semiconductor play. And it had a big announcement last night. Broadcom stock pops on mystery $10 billion AI customer. Broadcom shares have almost doubled over the past year as the chip maker has positioned itself at the center of the AI boom. Analysts project revenue growth will hold steady the rest of the year and accelerate a bit into 2026. Broadcom develops custom chips for Google and other huge cloud companies. Well, we're finding out a little bit more info of why it looks so good. Broadcom to help OpenAI create AI chip to take on NVIDIA. So for right now, for those people in chat who are like, why did NVIDIA not get the memo? Well, because it just got announced that NVIDIA it already had a competitor, but now this announcement is saying it has actually a very serious competitor. So this is the market pricing in the fact that maybe it's going to lose a bit of its market share. So anyway, here's a little bit of a breakdown from Bloomberg.
Matthew, talk us through what this potential new chip might be and whether it really would be a direct competitor in any way to NVIDIA.
Yeah, well, I mean, I think it's certainly intended to be a direct competitor to NVIDIA, and I think what we've learned is that initially, at least, the chip will be used purely for OpenAI's own uses, but that clearly would create demand tension for NVIDIA about where OpenAI is sourcing its processing power, and beyond that, could start to offer it to external customers too. So, I think in the kind of near term, at least probably the impact on NVIDIA is relatively modest. Now, I guess you're seeing that in initial share price reaction, not least because there's a lot of friction involved in shifting from one supplier to another, or even getting two different technologies to run side by side without too many issues. But I think clearly, longer term, one of the question marks about the NVIDIA mid to long term growth story is whether there are going to be serious rivals that come in and challenge their dominance in this market. And I guess this is a sign that their competitors are indeed investing and trying to kind of take a bigger share of that big AI chip market.
Sorry, I just realized that the market is pretty close to opening and I wanted to get my protective gear on. You know what's not doing so well? Lululemon. Lululemon shares plunge as earnings guidance falls well short of estimates. So basically, American Eagle partnering up with Sydney Sweeney, ripping. Lululemon not doing that, partnering up with, I guess, what's even the term? Instead of picking like the hottest models in the world, they're trying to pick average people to show that their clothes is for average people, obviously getting its teeth kicked in. A little bit more on the tech front. Tesla board proposes Musk pay package worth as much as $1 trillion over decade. CEO would be awarded installments of shares dependent on achieving milestones. Folks, we are now in the age of talking about people getting paid $1 trillion. $1 million is a shitload. $1 billion is 100 shitloads. $1 trillion is a number that I don't think many people can truly fathom. Like, that's just insane. Tesla proposes new pay plan for Musk that would expand his voting power. Tesla board is asking investors to approve yet another outsized pay plan for CEO Elon Musk. The full award would give Musk more than 423 million additional shares. The company also asked shareholders to vote on whether the automaker should invest in Musk's artificial intelligence company. If they could pull this off, it's gonna, dude, this is gonna get nuts. Actually, let's see, how's it looking this morning on this news? I would assume generically good. Yeah, classic inversion right here. Wow. So lower highs, higher lows, try to break out, got smacked, try to break out again. So we have these higher highs, we have these higher lows. Oh, I'm interested in this one today. 367. How much could this really go? 360. Geez Louise, how much money do I want to piss away today? That's the real question. Isn't that always inherently the most pure question? Oh, how do I want to do this? All right, I need to get some of these orders ready. Some of them ready, just in case the world gets a little bit nuts. I also need to dump one of my positions. So I wanted to cover that with Tesla. Obviously, putting all these things together, people are reacting very, very favorably to it. Where is this one? The 19th. All right. How are we looking at this? Actually, I wanted to look at some of these key levels. All right, that's easy peasy lemon squeezies. All right, we have that, and then I need to dump that play. Okay, cool. Sorry, I know I'm talking to myself, but I just wanted to get situated for market open. So we are gearing up to open up at a new all-time high. In the S&P 500, the Nasdaq's not far away. The Russell's looking good. Bitcoin's looking decent. Obviously, Netflix had a great day yesterday. Seems to be continuing a bit today. Meta, that's looking nice. Broadcom is the belle of the ball right now. Tesla's looking great. I mean, there's a lot of opportunity. If you ended up swinging things overnight, obviously a massive, massive, massive congrats to you. You definitely deserve it. You took a swing and it ended up paying off. It very, 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 very much did. Let me put my protective glasses here so I could see the screen a little bit better. All right, let me go over some of these key levels. So right now, the SPY is trading at 652. This is interesting because 650 was actually a long call area, and then some people were playing 52. There's really not much. Like, we might be talking about 659. There's not much to stop it. All the gamma structure, the backstop stuff, some of the potential resistance, we're leapfrogging over. We're right here at 652. 57 and 59 are in play with a reach target of 65. Once again, I'm not talking on a 0DT perspective. I'm talking about maybe up to the monthlies. It depends on how this structure changes. But I'm just trying to point out the fact that all the resistance was down here, folks. As in, if Captain Condor gets blown out, I don't see much really stopping us from continuing this trip higher. Looking at the NASDAQ, or technically the Qs, currently trading at 581. 581, remember that? 581, nothing. 581's over. This was not expected by the market. The next thing I see is all the way up here at 588. Like, there's just all the junks down here. There were no plays, really. This is very much catching the market off guard. And then last but not least, taking a look at IWM, it's at 238. Obviously, right here, 237, 238. This one has a little bit more of a structure going on. Let's do total gamma. Let me drop that. You can see 238, 239, and then past there, we're kind of talking about 250. So obviously watching that as well. But across the board, we're not seeing, like, before we've seen some of this stuff, we're like, oh, okay, there's resistance right above. The major thing that I'm seeing is not from an overall structure. It's just from a 0 DTE perspective, where we're kind of watching to see, does Captain Condor get blown out for the third day in a row? That's the major watch. If this breaks, I would argue pretty easy sailing up to 6575. I believe that's going to be the play of the day as of now. Of course, when the market opens, there's going to be new trades hitting the market, this, that, the other thing. But as of right now, and of course, we'll come back and we'll watch the flow. We'll check the structure to see if things do or don't change. But that's what I'm watching. That is 100% undoubtedly what I'm watching is a push of 3.5. Then I want to see what happens at 50 and then 7.5. That's basically my base plan of the day. My base plan of the day. Where do we actually close at? Right? Is that technically right? Okay, cool. So let me save that. Let me, I know we have some futures traders in here. So let's get up NQ, which I thought I had marked this out, but I did it improperly. Oh, let's go to the 10-minute. I want to mark out the high and the low of post and pre-market. All right, this is the low here, right here. Yeah, okay. So this is for NQ, obviously the low of post-market, the high of pre-market. So these are some zones I very much care about, but it looks like it's basically 23,900 and then lows all the way down here at 23,000, we'll call it 700. So we're in a pretty freaking gnarly 200-point range. I want to see if we can actually push above and hold above that on NQ. And then obviously on SPX, we are scheduled to open up at 6527. 6527 is all the way up here. roughly where my cursor is. Here, we're going to drag this right here. 6527, roughly where my cursor is. So 27, roughly here. I want to see this push of 3.5 on NQ. I want to see this push of 23,900. Pretty easy peasy lemon squeezies. If you haven't already, sign up for the newsletter, mattcohrs.locals.com. Pinned to the top of chat in the description of the video. And on that particular note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all, play responsibly, and if not, have fun. Okay. We're gonna do this, we're gonna do that. We're submitting some orders. Tesla's looking good. All right. Let's see how Tesla's already freaking going. That's crazy. What is this one? Tesla. All right, we did this. All right, we did that. We're trying to slap in some orders. If you're in Discord, I am trying to get rid of some shit. Getting rid of that MSTR play. I'm just trying to update my swingers very, very quickly. All right, swingers updated. Actually, if you're in the Discord, I'm going to send in a screenshot very, very quickly just so you guys have that. Once again, these are not my day trades or anything like that. It is just swingers. Where are you, swingers? It's pretty much exactly what I told you guys I wanted to do last night and early this morning. All right, so that's up there. If you're in the Discord, I updated everything I needed to in swingers. Other than that, let's see what we can do for day trading today. Let's see what in the world. By the way, we are at a new all-time high. So whatever you see today in the S&P 500, whether it's SPX or SPY, congrats to you. That is a new all-time high. Remember, Captain Condor blowout level is 6535. Remember, that's measured by the end of the day. So we're going to watch that. And obviously, that player can choose to update their position whenever they want. So we'll keep coming back here to check it out. And then other than that, for my NQ people, we tried to push up right there. Minute one, we tried to break that pre-market high, and we're getting a little bit hit right now. I kind of don't mind that in all reality because it might give me an opportunity to get on a dip and on like another retest of that. But I might be waiting a little bit. Very quick question. Maybe Profit, you know this? Are Michigan numbers coming out today? Does anyone know off the top of their head if Michigan numbers are coming out at 10 a.m. today? Anyone? I could look it up, but I was just curious if anyone. Yeah, dude, you have Netflix already breaking out. I'm getting an alert on Netflix. That's looking strong. Meta, not much. Avago, beautiful. Tesla, looks like it wants to break out. Obviously, I'm watching 355. Microsoft tried to get going, got smacked this morning. Apple continuing up. Palantir consolidating. I'm waiting for that break of 162. Nvidia taking a bit of a hit because of Avago looking so good. MSTR, I dumped that play. Coin flat. Hood actually potentially turning around. And the other thing potentially turning around right here is Bitcoin. Bitcoin. Oh brother. All right. How are we looking right now? We're dancing around. Little up, little down. Let's see how things stabilize. Hopefully it doesn't give away too much. I'm expecting a little bit of profit taking at open, which is common, especially when you have these downside gap fills. I don't like playing downside gap fills when it's news driven, because sometimes the market is just saying, hey, we are mispriced and we need to be priced in higher. That's totally possible. So let's just wait and see there. Wait and see there. Wait a minute. Wait a minute. Hold on a second. All right, let's see how this goes. This is just very illiquid, honestly. Huh? What the fuck is going on? Am I getting bad data on this? A little bit of IWM's taken off. Tesla did pop, giving a little bit back right at that 353. Am I getting bad data here? Sorry, I'm just trying to check out something that looks a little weird, if you ask me. No, that's the right data. I guess it's just I'm not getting a fill. All right, I don't want to chase it too much. It feels like chasing could be dumb. We'll see what happens. We'll see what happens. The Russell, as kind of predicted, is still showing a decent amount of strength, like just getting that nice continuation in terms of levels here. IWM. Yeah, looking for 239 and some change. And in reality, it actually might be 241. That's a bit more important. Remember that breakdown that we did. There's stuff 239, 238. It needs to hold above. But from there, I'm kind of watching the all-time high on the Russell, on the small cap sector. 244.98. We'll call it 245. Not necessarily what I'm predicting today by any means. But in terms of a swing target, if you're looking like at a multi-day, multi-week type of a thing, I'm looking for it to take out 241 followed by 245. The SPY just kind of dancing around. Remember, this has been the MO of the major index, the SPY, and really the NASDAQ for the past couple weeks now, where it kind of messes around until sometime between like 950 and like 1020, and then it's been taking off. That's kind of been a very common pattern for it. Now, is that a guarantee for today? I don't know. I'll tell you better at the end of the day, but I'm not so surprised here. So as long as we don't see aggressive amounts of profit taking, I think I'm actually still going to be very excited, at least for this test of Captain Condor right here, and ideally just the destruction of that particular play. So it definitely could get a wee bit exciting. So I haven't really done anything yet with respect to day trades. Let me show you my accounts. Yesterday, you guys witnessed it where I had a long position. Unfortunately, I wasn't able to take advantage of it because it actually drew back too much before it took out. So I had to restart. These are fresh accounts, but I still have all those other ones that are running Icarus. So all these take profit accounts above my head, those are all purely systematic. And I have my system on right here. Icarus can't trade until past 10 a.m. So that's not going to be trading anytime early this morning. And then these ones are the ones that I'm manually trading, where day over day I just proved to myself that it is better to be a systematic trader than a manual trader. But hey, that is my burden to bear. So I haven't done anything yet today, and I'm attempting to, I guess, just have some patience, wait for an opportunity, maybe like a VWAP bounce or something along those lines. Or what do we even have? Maybe we have a flag play setting up, something like this to take advantage of. Maybe a VWAP bounce, a bull flag breakout. Maybe that's the opportunity. Maybe. Do I have this trade copier? Okay, the trade copier is set up properly. I'm trying to do my quick sanity checks on the situation. So I'm watching this flag a little bit. This is the super trend. These are the EMAs. This is VWAP. So just seeing if we could find support at, like, quote unquote, one of these logical levels. So trying to be patient. Right now, there's definitely some profit taking, some zero DTE profit taking. That's not surprising at all. That was kind of my base case assumption, especially when you have some downside gap fills. Downside gap fill on the SPY to 649.15. Downside gap fill on the Qs all the way to 575.60. I want to be very clear. I am not interested in playing that myself, just because, hang on, we're getting some movement here. you never know if we just rip and that gap stays in the chart for a bit. I don't like playing the gap fill when it's news driven. If it's just a natural gap fill from the overnight session, yeah, whatever. But when it's news driven, such as a non-farm payroll solidifying the fact that we're getting a rate cut, it could still happen. I'm just not interested in it. Well, while we're waiting for something to potentially occur here, dude, what is happening? 25. That's not the worst risk. All right. I'm waiting to see how this one really plays out here. While I'm waiting for this to play out, reminder, it is a payday Friday. Go to my Twitter, pinned to the top of chat in the description of the video. If you want to get one of the 5 Vanquish accounts and then also be in the marble race for $150 of cold hard cash, all you have to do is like, retweet, and follow. You have to do all 3. Like, retweet, and follow this particular tweet and my account at Matt_Kohrs, pinned to the top of chat in the description of the video. And then also don't forget, this is one of your last opportunities to take advantage of Public's partnership and their sponsorship of the F1 team Aston Martin. They are doing in like a full-fledged awesome experience at the Las Vegas Grand Prix. You and a friend in Las Vegas trackside, very, very cool, full experience. Check it out. As I covered a little bit before, and I'll just so you know, shout out to Public, pinned to the top of chat. It's in the description of the video. My mod will drop the link for you guys. Very important. I'll show you the market while I'm reading this. I just want you to know, what do you get? You get trackside access, VIP hospitality, meet and greets, the whole thing. All you have to do is have a Public account with at least $500, and you have to find the 3 Aston Martin cars within the app. They gave me some hints. Hint number 1, maybe look into investment plans. Hint number 2, look at their AI system alpha. Maybe ask it a question or 2 about Aston Martin. And hint number 3, don't forget that Aston Martin does have its own trader ticker symbol, ARGGY. Maybe something worthwhile to look at. So obviously shout out to Aston Martin there.
Order submitted. Order submitted.
All right. Did I fuck that up?
Order submitted.
All right. We're seeing how this is going. I have no idea. I'm basically just trying to trade.
Order filled.
Oh, hang on. So that one already locked in. So that locked in one of them. Nice, because I didn't want to carry that much size. Oh, what am I? I'm long at. That's really not that bad of a risk, though, especially for the opening market vol. I'm looking at this low right here at 941. Ideally, I can lock in here. Let's do this at 90. Let's see what's going on with Bookmap. On Bookmap, a lot of people are trying to dump it at 95 and then 900 flat. So 900 flat is an interest, a level of high interest. So let's, if that's high interest, we'll sell it at 95 on the first one. This one, so we'll sell this one at 95. All I'm doing is attempting to identify where I see other people. I see a grip of people trying to sell at 94, 95, and then 900. They're lowering a little bit. We've moved the point of control up to 75. As you saw, I already locked in one of those contracts. So taking a bit of risk off the table because I didn't really feel like swinging 3 contracts, especially because of the time of the day. It's still like a little bit early for me. I just thought I saw a nice technical setup. Tesla's going, Russell's going. Right now, I was waiting for the profit taking to stop. Maybe the profit taking stopped at 939. We're seeing a bit of life right here. Mag 7 has really not even dipped that much. It popped, went sideways, now picking up again. So I kind of like it. This is in my wheelhouse. The momentum, 5-minute clearly bullish, 30-minute clearly bullish, 10-minute bullish, 4-hour very much bullish, very much bullish. Jesus. Yeah, ES, we're at a new all-time high. There's not really much to even mark out there. NQ 5 minutes bullish, 30-minute is bullish. NQ, yeah, all these it's just bullish across the board. All right, moving that up to the next level to pay attention to. We'll watch this. We already broke that level. All right, we'll just mark out that current high. Actually, we don't even really need this one. Let me just clean up the chart a little bit. All right, so I care about this 4-hour breakdown, and then I care about the breakout of the next technical level, which we saw on Friday, August the 15th. And then that really does set us up for a potential push of the all-time high. Like I said, I'm waiting for this test right here, 6535. I want to see the first test. My base assumption is a slight breakout, and then on the first attempt or rejection, I care about the preceding test. Like I want to see attempt number 1, attempt number 2, that type of a thing. If it breaks and rips on the first attempt, hey, whatever, cool, have at it. But my base assumption would be this test does not do well on the very first time. But we're going to see, and actually, that is a little bit of a deeper pullback than I wanted it to be. Are we going to double bottom here? I might have been too early, as I commonly am. I was trying to play this breakout. I should have been a bit earlier to the entry. Definitely a little bit chasey on my part. Do I think it's going to bounce off of VWAP? Do I want to give this room to run? Yes, no, maybe so. Yes, no, maybe so. Yes, no, maybe so. Maybe I just get lucky. That's also always a viable option. Maybe just pure luck will help me out. I would love for this to recapture 60. I'd feel way better about my life. I would love to be able to move my risk to 20 to VWAP. It just doesn't seem smart in case there is a puke. Then I'd be losing my accounts. But there's a good chance I get stopped out here. It bounces off of VWAP and I would have been fine anyway. I simply just can't take that risk. I have to go for more of the lucky play and pray that this is a higher low. And if you took this trade here at 51, that is a far stronger play than I did. Is this not going to hold here? What are we doing?
Order submitted.
Let's see if that actually gets hit. This is SPY's giving way a little bit. All right, that's not ideal. Qs are attempting to hold. SPY's giving way. Yeah, someone's selling. The delta's dropping. Mag 7's holding. This is frustrating. This is going to be one of those days where I'm confident I'm on the right side, but timing's a little bit off. And I guess I could have been a bit more patient. on that one. Come on. I'm trying to get it. I'm trying to pick up another one on my larger accounts. I'm going to dump these at the recent high, 62 to 82, a nice 20-point gain.
Order
all right,
filled.
That just got me in. Like I said, we're going to dump this at 82.
Order submitted.
Change that to 81. So I had 3, locked in 1. It dipped. I picked up another one, and I'm attempted dumping it at this recent high, praying that this succession of higher lows holds. If not, I'll get out of 2 and I'll be able to ride 1. It's generically the thought. I don't like what I'm doing, this manual trading this early. But hey, maybe I'll be able to catch a nice bullish trend. Maybe. I would much prefer that this hangs out above VWAP though. Well, stays above VWAP. I want it above these EMAs. This is about to get tagged, isn't it? Fuck. Come on, a little bit of luck here. A little bit of luck and a lot of clenching. That's the game plan right now. Not liking this. I kind of need this little trend line here to break. So we had one breakout. Thus far, did not hold, but maybe we could get a secondary bull flag breakout. This downsloping trend line right here, generically would love it above 70. Just someone started hitting it with size. As soon as we got up to 75 here, someone smashed it. It is attempting to recover, but right now we're kind of in that awkward state of like, will he, won't she, like that type of a thing. Come on, let's get that follow through that I've been looking for. Let's get that follow through. There we go. There's that higher low. We just confirmed the higher low. So for everyone in the Discord, you know the whole valley setup that we've been talking about. Google to 3 trillion today. Very well possible. very well. All right, did I lock in one more? Come on, lock it in. So I went long 3, locked in 1. It dipped. I added another one. I just dumped that extra one. So we have already locked in 430 and we're running over here. All right. We're stepping up. Trying to lock in another one at 95. Why at 95? Because I see a lot of people trying to sell at 95. Actually, I should probably drop it to like 93 just so I'm not that goober who like almost gets there but doesn't get there. Don't want to be that guy. I would hate to be that guy. How embarrassing. All right. And over, that took it out. I'm not liking how aggressively this is getting hit, though. We just dropped from 80. Yeah, Vol's picking up. The ATR is over 11 points right now. I'd prefer very much. Obviously, my risk is currently the recent low. I would hate this expanding pattern of a fresh high and a fresh low. Of course, it's possible, especially with this opening like market volatility. It was looking good for a second there, though. We ran into a weird wall at 87. This guy right here, when I was targeting 94, because we just saw it as a bit more of heavy passive selling. Remember, the heat map above is sitting passive sell orders. The heat map below is sitting passive buy orders, like right here, someone was trying to buy. And then the bubbles are aggressive orders. The green is aggressive buy orders. The red is aggressive sell orders. And that's defined by traversing the spread and either hitting the ask or hitting the bid. So just, all right, I like this higher low. I could probably move my risk up to it if we take out this high. And then I really, on this one, just want a freebie play. I want to lock this in. Let me hang on, do a sanity check. Fuck. Someone's really trying to sell here at 90. Mine's at this next block up here at 94. Come on. Break through it. Break through it. Go, 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 go. Go, 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 go. Ah, fucking get it. No. Mamma mia. Mamma mia. Fuck, it hit 92. Son of a bitch. I try to... Oh, that's frustrating because like there's still most orders at 900. I was front running the major orders by 8 points. I still think I have a shot. Come on. Come on, give it to me. There we go. Pump it. Pump it, pump it. 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 There we go. All right. Stop to break even. No risk. Locked in 929, and I have one runner. Perfect. And then I also stupidly decided to... That one's still at 95.
Order filled.
Oh, that just got knocked out. Fuck. I should have moved this one down to 92 as well. The other one just, you heard it, just got knocked out for break even. So that one's 900 locked in. While this one, I was way too slow to react. I should have moved that one as well. Fuck, that's not good. That's not good. All right, now I'm in a position that I did not manage properly. I should have moved it. I wasn't thinking about it. I should have had these all tied together. It's because I was trading different contract amounts. I should have got that fill at the low 90s. I shouldn't have. Oh, that's on me. But like, how fucking unlucky. It goes to 93 and mine was at 95, just like the odds of not getting those 2 extra points. Oh, hopefully this isn't a trend reversal. I might be getting fucked on these accounts. That's not good. That's not good. I really should have dumped one and didn't.
Order filled.
Yeah, fuck. What just happened there? Why did I get knocked out at 1.3? Are you fucking kidding me? Are you fucking kidding me? Well, that's my fault. Are you fucking... Dude, this is going to go too. Fuck, dude. That close? Seriously? Anyway, the shit that I was actually managing, I did well. 917, 900 locked in. All right, let's see. Someone most likely just dumped some options here at 952. It's just this bullshit shakeout, and we just have to wait for a bit of recovery. Seemingly ran, yeah. We didn't technically test Captain Condor yet. That's this line right here. But we got close. We got within 3 points. We got close. Tesla's looking great. IWM's looking good. Bitcoin's looking good. Netflix giving some back. Meta's looking good. Avago, some profit taking. Still up 12%, but trending down intraday. Tesla's up 4.8%. Microsoft sold flat. Apple grinding up. Palantir grinding down. Nvidia trying to recover a bit. MicroStrategy got a pop, giving a little bit back. Right here, 952. I mean, it's just this. Someone right here sold a bunch of puts. They sold puts maybe to open, maybe to close. We'll have to figure out the open interest later. If I had to guess, it's probably below. It's probably something, maybe it's a put credit spread. Maybe they're just selling naked puts. I highly doubt that this is, I highly doubt. Yeah. Or excuse me, they're buying these puts. But when you drop on the blue lines, you are adding negative delta. Buying puts, but you don't necessarily right away know if that's bullish or bearish. You have to look at the change in open interest afterwards, because it could be buying to open or buying to close. It could be buying to open, buying to close. What? Have to repeat yourself constantly, but not just that. She imagines what you say. I don't know what you guys are talking about. There are no 10 a.m. announcements. The Michigan numbers aren't at 10. Damn, dude, I was way too slow to react to that. That was fucking stupid. That was really, really stupid on my part. Really, really stupid on my part. You know what I could do, though, to fix this problem? You know what I could do? I still have time. I still want to let the bot run as it should and me not be a dipshit. Where are we at? Where are we at? All right. We did that. What a fucking dumbass move. That such a dumb weak play on my part. Able to manage 20 of the accounts, but the other 5 just honestly slipped my mind, and then just from pure luck not getting 2 extra points movement, 3 extra points movement. But hey, sometimes shit like that happens, and at the end of the day, it is on you to completely manage that. At the end of the day, it is completely on you to manage that. Oh, what are we at? What are we at? Let me see. All right. All right. All right. Just kind of waiting for this first half hour to play out to see what the orbital breaks are. I'm really, to me, this seemingly has a lot of similarities for the past couple of trading days, where the morning is shaking some people out and then it ends up being perfectly fine anyway. But that is just one man's opinion, and obviously let price action actually dictate what in the world is going on. Obviously be mindful of the fact that yes, there is a downside gap fill. I think it's not likely that we hit it today, but I'm not saying it's impossible. It's just, it is statistically less likely when it is news driven. I'm expecting a test and breakout of the Captain Condor. That is my base assumption on the day, and I'm going to be sticking with that until proven otherwise. Until proven otherwise. Why did my stop? Oh, that was such... Having the levels right there and not reacting quick enough, that's painful. That's a painful one there, doctor. That's a painful one there, doctor. All right, but I think I've remedied the situation. So the other ones are flat as of now, 900 locked in. And I am just waiting to see how this really plays out. Waiting to see how this plays out. Double bottom? Double bottom, maybe? Mag 7 pumped. Everyone took a hit at 952. That's where I got screwed. Drifting down a little bit since then. Looking at the NASDAQ, big pop up till 952, then got hit. And then looking at the S&P 500, pretty much the same thing, 945, and then someone hit it with a flow alert here. I'm looking for a bottoming formation, and if I could take advantage of that afterwards, obviously I will. As of right now, 5-minute is testing, but still bullish. 10 minutes testing, 30-minute and 4-hour are bullish. 5-minute is holding, 10 minutes holding, 30 minutes. So across the board, the NASDAQ is bullish. The 5-minute on ES is questionable, but this might set up an interesting reversion trade. When I hear that alert go off, I might take advantage of it. Add alert. 30. All right, I'm getting my Vanquish account. Remember, Vanquish is the sim-to-funded options one. We're giving away 5 of these accounts today. With that code Goonie, you could get 50% off and 1 free reset. I'm looking to play this inversion right here off the 50 EMA. On the SPX level, that would be a push of 23. I'm looking for that right there. And I have my order teed up just in case. Market order, I have 10 of them. If it happens, it happens. If it doesn't, well, I never got into it. And actually, if we break this down, are we going to? Just trying to be patient, trying to wait for it. Low risk, high reward opportunities. This is testing here, though, on SPX, which, NQ just took a hit. NQ just took a hit. So, is someone still dumping options? SPY getting hit. NASDAQ actually just made a delta low. MAG 7 is actually holding flat. What are the large guys doing? The large players are actually still buying this. So this dip, I'm still in the mode of trying to find the right time to buy the dip. I mean, across the board, the 30-minute and the 4-hour on ES and NQ are bullish. I think that's very important. My Chrome is already acting a bit funky, but I'm still getting data, so I think you guys can still hear me. Yeah, they're still buying here. They're still buying. The big guys aren't giving up. They're buying into this sell-off. I get that it's getting hit. I'm not buying it, though. Yeah, downside gap fill. Maybe we hit it. Maybe we bounce. Maybe this is just a quick moment of reprieve. Honestly, that would make the chart a lot cleaner if we do hit the downside gap fill. Somewhere between 508 and 502, we hit that, we bounce. That would actually really clean things up and then give us that opportunity to bounce. Of course, if it fails, then the bulls might be in a little bit of trouble, but I guess the downside gap fill wins again. Obviously, multiple times in this stream, I've told you I'm not playing it. Obviously, I kind of wish I did, especially here at 955. You made a fresh low, you bounced, you put in a lower high. That was a decent opportunity to play right there at 955. You have a target of the recent all-time high, 508, downside gap fill at 502. We might just be heading for this, finding support and bouncing. NDX. Well, actually, that was stupid of me. Let's go back to SPX, and then here is NQ. Yeah, we have a key level at 800. Maybe it bounces off of that. We'll see. We'll see. Patience. I refuse to be caught chasing this to the downside today. I just don't think that's a smart play. I'm waiting for this to bottom out. I'm waiting for the options market to flip back the way it did at 10:15 yesterday. I wish the sooner the better, but we're just past the 10 a.m. opening. The Orbo breakout was to the south side, and now the game is on. The game is on. All right, speaking of that, disconnect, reconnect, maybe a VWAP bounce here. Oh, hang on, my connections aren't working as anticipated. My connections are not working as anticipated. And my trade copier is also not. What? All right. Edit strategy. This one needs to be 702. Okay. All right. Turning Icarus back on. Ideally. All right. Icarus is back on. So Icarus can't fire till after 10. So technically it could fire now if it gets everything it needs to. But that's a frustrating bad beat. Shit happens. I knew better. well, I like to say I knew better. I really was only thinking about these accounts locked in 900 per one, and just, I guess, was being an asshole about the others. SPX bounced at 6508, previous high, acting as support. Somewhere probably in the region. If it has a shot of bouncing, somewhere between 508 and 502, because 502 is the downside gap fill. So somewhere within this region. If it bounces a little bit early, I think that actually makes it a difficult bounce play to hit, because we actually didn't hit either of those levels. I would have preferred a third red bar that just hit that right away, and then we could bounce. This structure, I think, makes it a little bit difficult. But hey, that's what trading's all about. That's what trading is all about. I'm still... Oh, I don't know if I want to play that, though, if we haven't gotten the gap fill. Like I said, I'm still gearing up to play these calls, these long calls, but I'm not sure if I want to. You can see this was my trigger to go long, a recapture and a close above on ES 6530, just like puke, puke, puke. Oh, bounce. But 10-minute 6530, that would be a nice recovery. It'd be a nice recovery. But I really think I would much prefer that we just get down to 502 and then we bounce and then we test 35 up here. Here's a look at the options flow. The SPY is starting to show some bottoming, and then so is the MAG 7, and then so is the NASDAQ. So it might have another push down. I'm just commenting on what it looks like at this exact moment. Tesla's looking good. Where's Tesla's breakout? Tesla's breakout is actually it already hit it but got rejected. You want it above 55 and some change, setting up another test of 57.50. So hopefully that can get going. I don't know why that. All right. Is that going to pop off again? Sometimes these alerts really don't make the most sense to me of like when they decide to go off. All right. Well, good thing I didn't get tricked into chasing that out of the gate, because we still have this downside gap fill. Watching this area, 508, watching 502. Watching this. This is the exact region where I want to see either a direct bounce or maybe like kind of like a double bottom situation. That's the exact structure I'm looking for. Either a straight up bounce or a bounce, retest, and then a bounce. One of those two is what I want to happen. We just hit 508, which was the previous all-time high, but still there is a downside gap fill to 502 right here. So there still is about 6 more points. Now, there's no rules or anything like it has to get filled, but it would make it a lot easier if people, if it did get filled, because I bet there's a lot of, actually we could check, but I bet there's a lot of sitting orders to buy right there. Here's ES, here's the heat map on ES, yeah, right below. Yep. And then, so this is not, once again, not on the SPX contract, on the ES. You have quite a few trying to buy at 6515, and then a chunk trying to buy just below 6,500. They're actually targeting, what is this, 6,499. So quite a few buyers at 15, and then about 16 points below that, 6,499. So there are sitting passive buy orders. Maybe it's enough to get it to bounce. Maybe it's not. All I could really tell you is ever since about, what time is this? 9:52. Aggressive selling. Like we've just had this succession. There's a couple times it attempted to bounce, but clearly we are trending down. Clearly this is trending down. Those buyers are right at 15. It's 10:08. So we hit this. Maybe they just bounced it off the all-time high. Maybe they leave a 6-point gap. Life would be far, far easier if they just got this gap fill, because then you wouldn't have people sitting on the sidelines. It would be far, far easier. All right, I'm watching that trend line. I'm watching that trend line. All right, so we had a shot to go. It actually broke down right here at 955. Someone sold quite a bit in the options market at 952. That's actually where I got screwed right as we were coming up here. Unfortunately, there was a level at 98. I had mine at 95. I got some fills at 93. That was just like by definition a bad beat. So I'm waiting to see, I guess, really, are we getting this downside gap fill? And then if so, are we bouncing off of that? That's 100% what I'm paying attention to. I don't want this to turn into some sort of fuck. What time is it? I'm worried. I'm very, very much worried that Icarus might go short. What time is it? At the low of the day. Deeply concerned about that. Deeply concerned about that. I'm getting nervous. I'm hoping that this push, just seeing where the downside gap fill is, I'm hoping. Don't do it to me, Icarus. Icarus is live. And I'm just hoping it doesn't get tricked here. I'm very, very much hoping Icarus does not get tricked. Come on, Icarus. I would rather, instead of playing the breakdown, I would rather Icarus go long at like 800, a recapture of 23,800, 23,810. If Icarus could pull it off right here, 800, 810, somewhere in this zone is where I would prefer that this actually goes. Yeah, maybe even 80, I don't know, somewhere. If we can take out this eye, if we could take out this eye and just play a quick, ideally, if it works, it's playing a quick push back up to VWAP. That's like what I would prefer it to do, but we're about to find out. Well, while we're waiting to see if we're actually bottoming in here, I feel like everyone's just watching this 502 level. While we're waiting this, remember, today is a Payday Friday giveaway pinned to the top of chat in the description of the video. $150 cold hard cash and 5 Vanquish accounts to be entered. All you have to do is like, retweet, and follow. Do all 3 of those steps. It is the pinned tweet on my account. It's also pinned to the top of chat in the description of the video. And also, don't forget Public. This is their last push for an amazing trip for you and a friend. Las Vegas, F1, Drive to Survive, Aston Martin. As I alluded to before, you have to have a Public account. It's free to download, free to sign up. It has to be funded with at least $500. And then you have to find the 3 different cars. And if you need help finding the 3 different cars, I do have a couple tips and tricks if you want to write these down. Number 1. Look into investment plans. It looks like it is built for speed. Hint, hint. Number 2, check out their AI system Alpha, and maybe you want to ask it a question or two about Aston Martin. And number 3, do not forget that Aston Martin is a publicly traded stock under the ticker ARGGY. ARGGY. Maybe you want to give that one a little bit of a looky-see, if you will. If you will. Dude, this is taking a little bit too long. A little bit too long. I'm worried that this gap fill is going to fuck up Icarus. Like, why can't it just get it quickly and we could go? The faster, the better. Let's just get it right now and bounce. The longer this goes, Icarus's momentum reading is going to switch from bullish to bearish, and I don't want it taking bearish trades today. We almost got the gap fill. Almost got it. Come on. Then give us liftoff. Come on. We're right there. Technically, the Qs haven't gotten the gap fill. They actually have way more distance to go. You can see things are getting a little froggy. Some buyers, we're getting close enough that some people are starting to step in. They're starting to get a little bit froggy. A little bit froggy. All right, I'm getting my other order pending just in case we do bounce off of here. I'm looking at SPX 6515 calls. I will be going long 10 calls, and my target will be, about $1.50. It's not like a swing play. It's actually meant to be kind of like a scalp play, but seeing if maybe I could play this reversion if we get this bounce. Speaking of that, are buyers coming in? I want to let you know that across the New York Stock Exchange, people are still buying this. I get that intraday we're trending down, but we hit an all-time high today, and we've seen this stuff. Like yesterday, we kind of had a rocky start, and then we ripped into close. Like, just because we're going down right now, I don't think should get anyone bamboozled into thinking that, right here, 500. What are we doing? Is this our bounce time? Is this where buyers step in? Where are the buyers at? Yeah, all right. All right, within a couple points here, we definitely have buyers. And there's actually sellers on top, though, as well. What about on NQ? Let's see how aggressively these people want to come in. Huh. You don't say. Are we ever going to get this bounce? All right. We did get the downside gap fill on the S&P 500. Not so much on the NASDAQ. We still are seeing a continuation of profit taking without a doubt. Look at these calls. Just calls are being sold. S&P 500 just methodically, mechanically, robotically walked down. Really started at 10.05. The puts were already being bought, maybe to open, maybe to close, but regardless, puts were being bought starting at 9.52. That algorithm has actually not stopped. And then at 10.05, calls are being sold. Maybe sold to open, maybe sold to close. All I'm telling you is they are definitely being sold. And Jesus. What the fuck? Wow. Rapidly giving it back. I guess the buyers are not here yet, team. Where the fuck are they? I was told that there were going to be buyers at 500. I told that people respected recent levels. 10:16. We're about 45 minutes into the day. It was flat. Someone smacked it at 9.52. That's when the algo turned on right here. The put buying algo right here at 9.52. The two blue lines dipping. And ever since then, buyers have not shown up. Buyers have not shown up. Wow. Wow. We're just waiting patiently. 5-minute crack, 10-minute crack, 30 minutes potentially cracking, 4 hours still bullish. 5-minute crack, 10-minute crack, 30 minutes bullish, 4 hours still bullish. But we're actually heading for this pre-market low here at 25. We're 10 points away. And just like that, shit changes. All right. Once again, very systematic, algorithmic sell-off. It's a perfect walk down. You could see that on the S&P 500. Let me scroll out. You could see it on the NASDAQ. This is a bot system. They're just dropping the delta for whatever reason. And then even the Mag 7 put in its first lower high at 54 and became clear at 10. Jesus Christ. Are they going for the downside gap fill on... The downside gap fill on the Qs at this point, I really didn't think we'd be talking about this today, is 575.60. We are $1 away. They might just be shooting the gap there and going for that. The SPY's now in the red. What the fuck? Did anyone anticipate this? Is it going to be the other side of it? No. Is it going to be the other side of Captain Condor that gets tested today? Ran right up to one side. Barely got saved. We are at the spot gamma implied 1-day move low from vol right here. And we are also a 2 standard deviation move from VWAP. Golly. This is aggressive.
Order submitted.
All right. It's enough of a sell-off that I'm tempted to throw in some reversionary orders just in case we get a pop out of nowhere. This is enough for me to see if I could take a little bit of a stab at it. But it's not filled yet. I want to see a little bit of life. This is nuts, dude. I mean, I guess we're honestly just looking here. I'll set an alert on the Q's downside gap fill. Maybe they just hit that. This is painful. Well, for those of you who had the patience to wait and be like, yeah, I want to go long, but I think there's going to be...
Order submitted.
What the fuck do you mean order? No, Icarus did get tricked into going short. Fuck. Icarus. This is not what I wanted. It was, yeah. Oh, that makes sense too. It was enough of a bearish reading that it went short. Fuck, dude. Icarus might have flown a little bit too close to the sun on this one, folks. Oh. The only hope is the downside gap fill. And of course, it goes short at 1019 right before the pop. It couldn't have waited like 1 minute. It couldn't have waited 1 freaking minute. Icarus, come on, buddy. Be smarter than me. You got this, Icarus. You got this, buddy. Make them monies. Get the gap fill. Get the gap fill, buddy. It's obviously targeting 80. Come on. Fly high, buddy. All right. New updated idea is it quickly gets me my fill, and then we bounce from there, and then we rip. Icarus, all eyes are on you. This whole time I was complaining about not wanting it to go short, and it just kept going, and it would have got its fill multiple times over. Come on, buddy. You could do it. By the way, it went short at 695, targeting 680. And it pretty much bottom ticked it. Oh, Icarus. What were you seeing there, buddy? Well, I know what it was seeing. It started off with such a positive momentum reading that it took that big of a sell-off to switch it from positive to neutral to negative enough. And then when it was negative enough, it went bearish. But because we were up so much, it needed such an adverse move the other way to reverse the reading. And when it finally had that move, that's when it went, come on, Icarus. Come on, Icarus. Show the world what you're made of. Show them how... You're not the dummy. We're the dummy. Come on, Icarus. Do it. Icarus, bring home the money. Do it, Icarus. Icarus, this is for you, buddy. You got this, dude. You got this, dude.
Order
Icarus! Icarus for the win. Locked it in. 350 per account. There you go, buddy. There you go, buddy. There you go. All right. Well, had I not manually traded, Icarus would have been fine. All right. We got the downside gap fill on the Qs. If we don't start to bounce here, I don't know what to tell you. If we don't start to bounce right about here, I don't know what to tell you. That is some extreme systematic selling. Like I'm talking an actual system, a robotic algorithmic system, selling calls, buying puts. Selling calls, buying puts on the S&P 500, on the NASDAQ, on the Mag 7, like starting at 952, accelerating at 10:02, 10:05. So maybe that was the play just to get this downside gap fill, and then we bounce. That's a giant maybe. I'm just throwing out like guesses and conjecture here, but look at it. I'm on the 3-minute bar. Every single one is red. That's just a giant system. And what's confusing about it is the large players across the New York Stock Exchange have actually been buying this whole time. They're in the positive territory. So this is going to be an extreme patience play for sure. But hey, Icarus hit. All right. All this selling can like actually fucking stop. Is it even showing signs of bottoming? We're beyond the SpotGam implied one-day move low. Dude, I would have never told you this, but there's a shot that the bottom side of Captain Condor is going to be tested before the upper side of Captain Condor. What the fuck? Like, look how close we got. We almost tested it, and now, based on momentum, it actually seems more likely that the bottom side is going to be tested first. This is craziness. This is craziness, dude. All right. Is this our bottom? Please tell me we're bottoming soon. Look at that vomit. Holy shit. I should have put on my red glasses today. What a system just fucking sold all that. All right, so we now punctured the pre-market low. So before we ran up to the pre-market high, we're now puncturing the post-market low. I'm wondering if it could recapture this because yesterday, that was kind of the play of the day, was we got outside the bounds and then we bounced and we ended up actually ripping for the rest of the day. So I'm actually really, really curious about this one. I'm really curious if this is a low risk, high reward opportunity. Will it work? I have no idea. But what I can tell you is if we get back into here, you could risk the recent low and your profit target's all the way up here. From a risk reward paradigm, you don't have to get that type of a trade right many times to be net profitable. So it tried to bounce right here. They tried to save it and it smashed it. And it's continuing to smash it, unfortunately. This is showing no chill. But I care a lot about a recapture of 90, and you could even call this high, maybe even a push. Somewhere in this zone is what I care about. If we can push and close above this, this might be the bottom. And whether it is or it isn't, it's a good risk reward setup. Whether it is or it isn't, it's a good, like, can we push 87 here? Buy stop market.
Order submitted.
I'm watching this right here. We punctured a key level. Will buyers step in? We already got the downside gap fills. Putting a couple of these pieces of the puzzle together here. Can we bounce out of it? Maybe we can. Maybe we can't. But if we don't, it's low risk. The risk is just this recent low. So it's not disastrous. And we didn't even go on that one. Jesus, dude. They are, this algo is not turning it off. They just keep selling. Like, look, well, hang on, scratch that. Some bottoming aspects on the S&P 500. The NASDAQ is still getting hit. The Mag 7 is still getting hit. These guys have not started selling yet, though. I find that to be interesting. We are 2 standard deviation moves away from VWAP. This is the fact that we started up 1 standard deviation move to the north side and then have now been hit to the tune. We reverted 3 standard deviations. That's fucking nuts. That is absolutely fucking nuts. All right, 70. Snap of 500. I said my next target was 70. Mag 7 has been sold pretty hard. Maybe the 0 DT is showing some bottoming signs. The S&P 500 is definitively showing some bottoming signs. Let's go back to this structure. Ugh. That's looking brutal. I'm looking for the recapture of, see this block we just sold. I'm looking for the recapture somewhere between of 692, 700, 706, 730. Somewhere, if we can recapture the low 700s, maybe it's a dip worthwhile to be bought. Maybe it's a dip worthwhile to be bought. But it just keeps going, dude. Where the fuck are the buyers? Okay, the Mag 7 maybe showing a little bit of bottoming. The SPY, or is it just gearing up for another puke? Price keeps going down, but the option selling has at least chilled. This was a giant sell program that lasted about half an hour. Half hour of just getting smashed. Smashed. But this is the question. Will we bounce out of here and recover this entire zone? Remember, we've definitely seen crazier shit happen. Will we just find support at yesterday's high and low and recover this entire sell-off? Same thing on the SPY here. The question is, will we recover this entire sell-off? Wow. Crazy to see this in real time. Like absolutely fucking bananas to see this in real time. Well, this is taken. Trump just tweeted. What did he tweet? What did he tweet? What did he tweet? Jerome, too late. Powell should have lowered rates long ago. As usual, he's too late. I have a feeling that Jerome Powell and the FOMC has more knowledge of monetary policy and the economy than Trump does. I mean, Trump's campaigning for a 300 bips rate cut, and that's just actually insane. Like, that's like ludicrous. Ludicrous. All right, I'm looking for this full day recovery. Come on. Let's get some wind behind these sales. Let's get some wind behind these sales. Hey, the one positive thing I can say is at least Icarus hit, you know? At least Icarus hit. Come on, let's see that. This is it. One giant system selling. One giant system selling. This whole block of selling. How deep is it going to go? I want to see if this is all reverted. We need our first green bar so I can actually properly draw out this block. Where the fuck are the buyers, guys? SPY starting at 1025. It is not getting hit anymore. The SPY has bottom. Once again, this could lead to an additional puke, but maybe this is actually the low of the day. Maybe. Mag 7 also since 1025 showing some bottoming. I'm watching this bottoming right here. We're looking for the delta to start to pick up. And until then, it's kind of like either you're riding the short you already have, or you have to be patient for the long. I don't know if you want to front run the long before seeing that delta actually pick up. Come on, dude. Where the fuck? It just keeps getting stomped on. It just keeps getting stomped on. Holy fuck. All right, well, while we're waiting on this, we might as well do a giveaway and make someone's day a little bit better. Pinned to the top of chat in the description of the video, we are doing a giveaway of 5 Vanquish accounts. They are running a huge deal right now, 50% off, no activation fee, and 1 free reset. Use that code Goonie if you want to buy one, but hey, maybe you'll be lucky today and win one. Once again, 5 Vanquish accounts. Also, the 5 people who win the accounts, I'm going to put you guys together in a marble race for $150 of cold, hard cash. So like, retweet, and follow. Do all 3 of those. If I reload this, you're going to see that I'm sure some of you figured it out. Yeah, looks like 80 of you figured it out. Remember to like, retweet, and follow. And you guys will all get the Vanquish account if you want to buy one. Honestly, I've been waiting to trade on Vanquish today. We're just not seeing the bottoming, unfortunately, which that means I actually need to run this down even farther. I might have to be quick to react, so get ready. I haven't done any trades on it yet. I'm just waiting for that opportunity to see if there actually is truly a bottom, but this is thus far just a waterfall. But we're seeing signs of a potential bottom. See how flat, puke, and now we're flat again? At least the algo turned off. We were up, straight down, and now kind of flattening out. Looking at the NASDAQ, up, down, and flattening out. So we've been flattening out since about 1025. The question is are buyers actually going to step in or not? Are buyers actually going to step in or not? Maybe yes, maybe no. I should probably set up some alerts here. All right, we're pushing on 70, which means I kind of care about this alert. Remember, we're still in the, unfortunately, we haven't broken the transition zone yet today, as in like, making me confidently bullish or bearish on an intraday basis. We got to the top of the transition zone, and now we're heading to seemingly the bottom of the transition zone. But once again, still in the transition zone, still 100% in it. The top of the iron condor, the bottom of the iron condor. We're just kind of waiting on that one. I wanted to get that break, but nope. We opened up the top, vomited, did not catch ourselves at the gap fill or any of this shit. The previous high, today's high is the all-time high, but unfortunately just not catching ourselves there. And this is very rapidly turning into shit. Just the buyers are not stepping in. SPY took another little hit there. NASDAQ took another little hit there. MAG 7 took another little hit there. Is this where buyers step in? $76. What order do I have queued up? 90. No. Let's do 76. Let's do 6485. 6485. All right, we'll try to get those on a potential reversal, which I have the alert set for taking out this recent high, but you could see just basically lower highs and lower lows ever since this. I mean, the program literally turned on at 9:59. We can see that right here in the options data. That flow alert, it started right here at 9:52, and that options delta sell-off perfectly associated with where this started to get cracked. We took out that recent low, and then all of a sudden a succession of lower highs and lower lows. So intraday, by definition, this is still bearish. Oh, by the way, shout out to Mike Kimball. I'm seeing right there that you got some memberships for people. Shout out. That's very kind. Well, maybe you'll be the lucky guy who ends up winning one of these, which we might as well get rocking with this. Okay, so let's at least give away the Vanquish accounts, and then I'll get the 5 names, and maybe we'll do the marble race in a second. But all you have to do, like, retweet, follow. Like I said, you could go to the link for Vanquish if you want to buy one. That's exactly what I'm trading on right here. It is SIMDA funded for options trading, and that code Goonie will get you 50% off and a free reset if you are not so lucky on your first Vanquish account. Okay, so let's do Twitter picker. I always forget the website that I use. The X picker. All right, close pop-up. All right, so what I have to do is copy the tweet. You have to like and retweet. We are doing 5. And then obviously they must also follow. So I believe that is everything. All right, Okay. That's the tweet. Like and retweet. There's 5 of them. Matt_Kohrs. All right. Best of luck because we are rocking it in 5, 4, 3, 2, 1. Who's it gonna be? Who's it gonna be? Coffee, Jasf, Elon Muskie, The Visual Factor, and Dave Spears. All right. Let me quickly screenshot this so I don't forget who they are. All right. Downloads. Got it. Saved. And let's see who it is. Let's check out these accounts. Let's do a little bit of snooping. Here. Let's see who it is. Dude, the market is still getting hit. Chip Stack, Jasf, Bot, Jacob, Flexin, and then also Hogelism with a picture of a bird. So congrats. You guys all have won a Vanquish account. Obviously, I will be reaching out to you later today to get you the information and get you connected with the Vanquish account. But also, you 5 guys or gals or bot accounts are also going to all be in a marble race. And since the market looks like shit right now, we might as well get going with this marble race just to see what in the world is going on. I don't know why you guys are commenting numbers. That seems a little bit crazy. That seems actually a lot a bit crazy. You don't have to spam numbers. We're very evidently not doing that today. I mean, if you want to spam numbers, have at it. I'm just letting you know that's not going to get you anywhere useful. All right. Maybe I should save these 5 accounts. All right. Over here. 1, 2, 3, 4. All right. I have all 5 and we are, I guess, launching. Oh, here's marbles. We got it. I think. I lost my mouse though. Uh-oh. Mom? Oh, there we go. Found my mouse. Sometimes I lose my marbles. Continue. Race. Random. We are racing on Taking Flight 2. Bots. All right. Add names. All right. The first one is Chip Stack, aka Coffee Break. Number 2 is Jasf, whatever that means. Number 3 is Bot, and 4 is Jacob. Bot. Jacob. And then 5 is Hogelism. I don't know what that possibly means, but I like it. Hogelism. All right. We got our names. All right, cool. We are on bots. We have our racetrack. Let's get ready. Let's listen to some interesting music from Tendies and Tunes. The music that you guys hear at the start of every single show, we give out for free. If you go to the YouTube channels, Tendies and Tunes, it's in the description of the video. You guys were really liking the jazz this morning, but I actually thought the Margin Call Meltdown video, the song from yesterday, was awesome. So we're going to listen to that. But very quickly, I guess let's take a peek. Is the market still puking? Probably. Yes, in fact, it is. All right, that was their first green one in a minute. Is it pushing? We're actually, dude, how fucking nuts is this market that we actually might be pushing the bottom side of Captain Condor, even though we were first close to pushing the top side of Captain Condor. This is slicing through the buy side liquidity like hot butter. Fuck, that's getting annihilated. That is crazy how this is playing out today. That is absolutely nuts. Absolutely nuts. Anyway, let's distract ourselves from the pain by giving away some cash. All right, we have 5 of the fastest racers in all the land. This is Taking Flight. I believe just that's the name of the track. And let's get a little bit of music bump in here. All right. We are going in 3, 2, 1. Best of luck to all racers. All right, let's see. Hogelism. Oh, Jacob's catching up. Who's going to get the first drop? Hogelism does. Followed by Jacob. Followed by Jazz. Followed by Bot. Followed by Chip Stack. Hogelism taking the right path. Jacob. All right, we're 3 and 2, right and left. Who do we follow? Who's going to get the Hogelism leading right now? But Jacob and Jabs, the two J's going on the left path, while Hogelism. All right, but let's see who can actually take flight first and avoid all these luggage carriers. All right, they're coming in hot. They're coming in hot. Who's going to get the drop? We have 3 versus 2, right path versus left path. At this point, it's anyone's race. Hogelism is leading, though. He's about to drop onto the tarmac, followed by Jacob. Jacob and Hogelism leading the respective paths. Here we go. Who's going to get the drop? Jacob edging out Hogelism, getting the first drop, followed by Bot. Now we're really racing. Uh-oh, Hogelism catching the speed up at some point. The read. Jacob and Hogelism going for it. Jacob, first one. Oh, there's a whole nother map over here. All right. It's between. Oh, Jacob, misstep. Hogelism takes advantage of the drop. Will he be able to regain? Whoa, Jazz coming out of nowhere. Hogelism leading. Is he going to get the first drop? Who's second? Jazz and Chip Stack dead, unfortunately. Hogelism wins. Congratulations. Jacob and Bot still putting in a... Jacob getting in second. And then where's Bot right now? Bot dropping. Hey, I got to appreciate the effort to still finish that up. You got to appreciate that effort to finish it up. You know, a true competitor until the end. A true competitor. As Chipsack and Jazz all got margin called. Hogelism, massive congratulations to you. Not only do you win the Vanquish account, but you're also getting $150 of cold hard cash, while all 5 of you are getting one of the Vanquish evals. And of course, if you want to take advantage of Vanquish, wow, the market's still getting hit. Just a reminder, 50% off, free reset. All you have to do is use that code Goonie. So shout out to that and congrats to everyone. Congrats. I'm still waiting on my trade. Has not occurred yet because we are not showing a sign of relief. One single sign of relief has not been shown. Mag 7 still getting hit. S&P 500 is flat. NASDAQ, oh, that's what just happened here at 1038. Getting hummerked. Jeez Louise. Wow. That turned into a lot of call selling. This is just, it's so systematic. It's so perfect. It's so robotic. We're just getting hit hard across. Look at, we started off so strong, so incredibly strong, and now it's just getting so incredibly smacked. So smacked. Wow. Well, if you somehow faded this move, I guess a congrats to you. I'm not really sure what you were looking at that made you want to fade it, but I guess at a certain point, like, you did good. You did good. You got a lot. RIP calls. You'll never be forgotten. This is fucking uncanny. So incredibly faded. It reminds you of all those times when you're like, wow, this is looking so good. Like, wouldn't it be funny if, and then the if thing actually happens and it just completely destroys people. Oh my God, we might as well just turn the fucking markets off. Dude, we are literally about to tap the bottom side of Captain Condor here. 6455. Holy shit. Who would have ever thought that in a million years, when we opened up all the way up here, you're like, okay, obviously we're testing, we're breaking out, and this guy's going to get screwed again. They might get screwed again, but it's because the bottom side is about to get screwed. That's insane. New all-time high, systematic selling, getting destroyed to this point. Wow. That's crazy. Well, the test is coming up. 55. The test is coming up. Welcome to the actual simulations. Holy shit. Statistically, this is just so fucking wild. This is so from just a math performance or from a mathematical breakdown of the performance of the stock market. What you're seeing right now is statistically very rare. This is not by any means a common occurrence. It's just so perfect. Flat, flat, flat. Sell program stopped. But you have like these reverberations, this extra panic. We've gone from 23,880 down to 23,600. We've dropped 300 fucking points. Has there ever been a time where it has recovered the entire move? Yeah, of course. But this is getting brutal. Brutal. Oh, doesn't bounce out of here. Is it actually going to tap it? 4, 6, 4, 6, 4, 6, 5. All right. I mean, it is support. I'll try a reversion if we can make a fresh high, but I've not seen a fresh high yet. I have not seen a fresh high. NASDAQ maybe bottoming. Mag 7 looks like it's selling. SPY has been showing bottoming this whole time. Starting at 1023, the SPY has not really kept puking. And the big guys have not really started selling it. They still bought this move. So even though it looks pretty catastrophic, and this is statistically very, very fucking insane, the data underneath is not necessarily showing a continuation here. It's just so systematically perfect. Selling. Like it's so perfect, which just tells me that it's an algorithm. Like this isn't necessarily like, of course there are human traders and maybe there's some panic and margin calls, this and that, but this is clearly a bot system that is just dumping on the market. Clearly a bot system. Is it going to be able to get out of here? Are we actually going to be able to make a fresh high? I would love for it to take out 6460 just to give it maybe potential relief here. The fact that we're talking about yesterday's low at this point is actually fucking nuts. All right, I'm taking a stab at it. Where the fuck is my order? I gotta fill. Do I have to log? Something just happened. I got some form of a fill. Oh, there we go. What was it? Average fill. Long call 6465. I'm in at 1320. I want $1.50. So that's 1470 is my target. 1470. I want $1.50 because that's 1.5K. We'll see. We'll see if I can actually catch the bottom or at least a little bit of a relief. Once again, I'm in at 1320. I'm attempting to dump it at 1470. I have 10. That should be a gain of 1,500. Come on. Let's see a little bit of a pop. Can we get this pop? We didn't. This is the first fresh high we've made in a minute. What time is it? It is at 10:53. This is the first new high we have made since, what time is that? Since fucking 9:49 today. Jesus Christ. Did it get a fill? Hey, I made it. There you go. 1,600 locked in. Realized P&L. The position has closed out. That was easy. Well, I guess we might as well close that while I'm up. But yeah, right there, 1,600 locked in. Locked in, locked in, locked in. Locked in.
Order submitted. Order canceled.
What just traded there? The bigger accounts just traded for a little bit of a scalp. Dude, that's a lot of risk. 40. Oh. Are we really going to be coming all the way back up?
Order filled. Order submitted. Order submitted. Order submitted.
All right, we're fishing. We're going for the bottom of the barrel. Oh, so that one already locked in right here. That was nice. So that one locked in, quick scalp. So those are up 1,000 on the day, excluding this one for some stupid reason. I don't know why that one's only up 878 while the rest are up 1,000, but hey, it just is what it is. So these are looking pretty good. And then right now, what I want to do on these accounts is lock in at 50, move the stop to break even, and let the other runner run to see if I could catch the bottom of the day. Oh, we're going to see how this goes. Come on. Lock her in. Don't be a fake out. How are we seeing? Are we actually moving now? Okay, so the big recapture is 692. So 23,692 on NQ is going to be an important one because not only is it support, not only is it resistance, but is the bottom of the pre-market, the overnight trading low. So if we get back up into this, this gives us a shot at a recovery to 800 and then potentially 900. So this is a key watch right here. The high 600s, we did make a fresh high. This is our first fresh high. Here's the most recent high. And then here, maybe it'll make more sense if I draw these out properly. So red, and that's 2 ago. So what we'll do is we'll make that dashed, and then we'll do this. And then we'll do this one right here. And then we'll do this as well. Okay. So just to have a little bit of a structural price action conversation. So obviously this is applicable to like whatever time frame you're on. So the hard lines, like the non-dash lines, the solid lines, are going to be your recent high and your recent low. And then the dash lines are going to be the high and the low from 2 ago. So right now we're in a situation where the most recent high is above the previous high, potentially bullish. But we're also in a situation where as of right now, the most recent low is below the low, the previous low. So we have an expanding pattern. We have a higher high and we have a lower low. So we're waiting to see if this is that V-shape inversion moment where actually the next low is going to be higher. If this right here at 1056 ends up, like if we push right here and that's a higher low, well, we might be switching from a bearish trend to a bullish trend. So since this is the first time, at least on this time frame, the 1 minute, remember this is going to be specific to the time frame that you're trading, but I'm just using the examples of the 1 minute right here. We officially have a higher high. This just pushed higher. Maybe it's a fake out if we take out
filled.
What just got hit here. Oh, well, that sucks.
Order canceled.
What the fuck account was that? Dude, I'm so lost on what accounts I'm trading. I hate trading these all separately. Oh, okay, because I was using it on this 500, this breakdown. Okay, so I'll re-enter at whatever, 26, 27. No worries. Anyway, back to this explanation of we pushed, we made a higher high. Here's one high, here's the next high. We still, as of now, established have a lower low, so this is the expanding pattern, and we're waiting to see how deep this pullback is. If this pullback is above this low, we might have a trend switch. which is kind of what I'm interested in. And it was on this first pump that I caught that Vanquish trade, but now I've made as much as I need to on the day. I try to like stop that one at 1,500 per day. So let's just wait to see what this is. And it might, it's a fake out. Obviously, if it's within a couple points, like that's where you play a little bit more artist than scientist. If it's like, oh, you double bottom, like if we quickly bounce out of here, it could be a little sweep, but looking for maybe that push of 93 now. So we're still in this confusing pattern of, yes, we do have a higher high, but where are these lows? If we bounce right out of here, I would call these equal lows. Remember, it's like, if you want to be really like mathematical or hyper specific of it, you could use it to a tick. Sometimes if it's within a couple points, I'll give it a little bit of leeway to call it like a lower low or an equal low. That's up to you. That's your own preference. Obviously, if we're being exactly accurate, you would call this a lower low. Hang on, what did I just get? Fuck, dude. The SPY failed bounce right there. A little bit of a dead cat bounce. Maybe we double bottom out of this one. Maybe we double bottom out of this one. Holy shit. What a fucking wild market this is. What a fucking wild market this is. All right. So for me to be interested here, I would want to see the SPY specifically recapture 645.40, and I would want to see the Qs recapture 574.08. 574.08. Why did that? All right, I guess neither of these alerts are working. But back to this conversation, just because I think it's a good teaching moment. All right, so there is a chance that this is just a double bottom, and then that you could be a little bit more sure of it if we take out this recent high right here at 649. So there's two ways to do it. You could be more sure, have a higher accuracy trade if you wait for this actual breakout. But if you do that, you're then taking on larger risk because your risk is the recent low. However, if you try to pay the early part, your accuracy is going to be lower because you technically didn't get the breakout, but the trade out there is you took on lower risk. So that's up to you. That's very, very much up to you of, do you think that's the right way to do it, the wrong way to do it? I would never say right or wrong. I would say that's kind of like player's choice, and like, what do you want to do? Do you want to have a lower accuracy trade with lower risk, or do you want to have a higher accuracy trade with higher risk? That is going to be the relationship in the stock market between risk and accuracy. The higher your accuracy is, the more risk you're going to take on. So in this particular circumstance, you could be more sure about the reversal if we take out 69, but your risk is all the way down here at 50. You're taking on 19 points of risk. However, if we start to bounce early and you're in at 60, well, you're taking on 9 less points of risk, but it hasn't actually broken out yet. So that's up to you. I'm not here to pitch one as being right or wrong. It's kind of up to you and how risk adverse you are and where you want your accuracy to be. And of course, it can get even more complicated, and you could put in like scaling strategies. You're like, no, I put in my initial position here and I put in the final portion there, or you start to scale in the whole way up, or there's various things you could do. I wouldn't say that like one size fits all there, or I wouldn't say one is mathematically optimal. But Matt, what if I have a strategy that is high risk, low accuracy? Well, that this is something you should probably work on. That is probably something you should work on. Oh, brother, are we going to fucking bounce out of this? Wow, this is just getting fucking So it showed right here, that little pop we got, it showed a life. There was a heartbeat, a second of a heartbeat. Even this, we saw a heartbeat, but it, I guess, was a ghost heartbeat, and our patient is still dead. Our patient is apparently still passing away. Wow. I cannot, dude, if you told me at the start of today that it was, in fact, the bottom side of Captain Condor, who is getting tested today, that is insane. The odds of this happening are so fucking incredibly small, and yet it is what our reality is right now. That is nuts. That is absolutely nuts that we started points away from the upper side of Captain Condor, vomited all the way down, and we've actually broken the bottom side of it. That is absolutely insane. We discussed a week ago or so about how if you don't set a stop loss, you can get stopped out. I paired that with a 3-point profit target, and I got to say it's been interesting. If you don't set a stop loss, so you're just risking the account, which, hey, if you hit it enough, I mean, I guess congrats. So we try to make our first higher high. That one failed, and obviously we've now made a lower low. So we're now in an expanding pattern. Higher highs and lower lows as of this moment. We are getting dangerously close to testing the low from yesterday. Wow, today did not go to any part of my expectations whatsoever. No way. I mean, why would this be my expectation when the chance of what's happening right now is statistically very low? What you're seeing, obviously it can happen. This is one of those outlier data points, but it is just so statistically rare that it was never my base case. But I guess this just proves that the market gods have a pretty fucking sick sense of humor, you know? A pretty sick sense of humor. It's going to be more funny when we recover to a new all-time high by the end of the day. Mark my words. Matt Kohrs, September 5th, 11:05 a.m. East Coast, New York time. I will be laughing when we make a new intraday high by the end of today's session. I might seem crazy now. I might see like a hobo on your screen, but you can smell it from here. Yeah, they can smell what we're cooking up. They can smell what we're cooking up. They can smell it. Smell it, smell it, smell it. They can smell it.
Order submitted.
I'm putting in a pending order for a potential reversal. A potential reversal. Mag 7. Come on, let's bottom out. Let's stop this puke fest. Let's stop this puke fest.
Order submitted.
Well, we're probably going to see these accounts go to hell. What I just did there was a super basic run-of-the-mill super trend crossover. Nothing too special to it. Nothing too special to it. Oh, maybe I get lucky, maybe I don't. Maybe I get lucky, maybe I don't. If I'm not mistaken, if this pushes 65, I think Icarus should fire on the big accounts. If I'm not mistaken, but these ones are about to get blown. Fuck me, dude. All these goddamn fake outs. Fuck this market, dude. Fucking piece of shit market. Well, it's also 100% my fault for trading two contracts. I can't get that pissed when I'm like intentionally oversizing for no good fucking reason. For no good reason whatsoever. Dude, knowing my luck, this is going to come right back. Hang on. I'm trying to see where Icarus is supposed to fire this time. Okay. I got it. I got it. So the Qs, I don't know at this point. We're just kind of throwing fucking darts at the board here. Maybe finding a base at the high from 2 days ago. The SPY's dangerously close from the low from yesterday. The Russell's also puked. Tesla's puked. Bitcoin's puked. Everything was very green this morning. Nvidia's down 3.9%. Palantir's down 4.6%. Apple's in the red. Microsoft's in the red. This is insane. Maybe you should try it with goggles on. I probably need them. Did that actually switch back over? The stupid fucking... No, it didn't. See, this is my fault. I should have been trading with the size where I could carry the appropriate risk. It did switch, and it hasn't even flipped back. It was just a stupid fucking pullback because of how it's measured against your unrealized high, which is such a fucking infuriating thing. Such an incredibly infuriating thing. You could have ridden this super trend down so much today. So much. You pretty much could have gotten in at 10 and you wouldn't have gotten knocked out. Like, you would have been up 300 fucking points. Well, it's still going anyway, so they definitely would have been blown out. That's fucking nuts, dude. This just keeps going and going, going and going and going and going and going. Well, we had one little relief that had no follow through at 10:51. Instantly got smacked right here. Had a little bit of a pop, made a fresh high, and now we are back to, can I draw these out? Where did my lines go? Did I not draw it on this one? Well, anyway, you can clearly see we have lower highs and lower lows. Right here, there's that high, there's that high, there's that low, there's that low. Just getting fucking murked. Absolutely murked today. Maybe you have a shot. Maybe you let it take out the high, see where the next low is. Right here, we took out the high. Unfortunately, it was a fake out, and we made a new low. So if you're looking for the reversal, maybe it's the time to be safer. Wait for the high, and then that's like where you get interested, and then just wait to see where the next low is. That's probably a safer way to approach this, but maybe we find support there. This is just fucking uncanny, dude. We full tripped it. We full fucking tripped. Look at that. That was yesterday's low. We ripped it, gapped up, held, like, this is just disgusting. Absolute, like, literally the bottom side of Captain Condor is getting tested right now. This fucker. That's crazy. Crazy, crazy, crazy. Crazy, crazy, crazy. Crazy if you ask me. Actually fucking uncanny if you ask me. Here's a look at the 10-minute. We've had nothing but red bar since 9:50. Nothing but red bars since 9:50. Wow. Well, if you're ever sitting there and you're trading and you think to yourself, there's no way XYZ could happen, have today be a good lesson for everyone that, in fact, the absurd thing that you don't think could happen most definitely could actually happen. Jesus. Wow. I think the only fun thing today is that I got lucky with my initial trades and then Icarus hit, but then I fucked those accounts anyway. Is this our bounce? I think Icarus is actually about to fire again here. Is it? Icarus, where are you, buddy? Icarus should be taking this breakout, I think. Where are you at, buddy?
Order filled.
There you are. Oh, it hit that quickly, I think. Icarus? Yeah, it did trade. Did it trade on all the accounts? It was that quick? Yeah. Well, that hit. Long at 62, hit 63, 64, 62. So it made 2 points on 3 contracts. So, hey, that one worked. Took a little bit of the initial recovery. Golly. Robo keeping Matt alive, dude. It's only the robot keeping Matt alive. It is only exclusively the robot keeping Matt alive. I'm going to be honest with you folks. All right. Well, I would love to see a full-fledged recovery all the way back up. Is it possible? Yes. Is it likely? No. But hey, it is what it is. Before I get to let you go, don't forget to sign up for Public. Remember, they are wrapping up this giveaway in Ultimate Racing Weekend in Vegas for you and a friend. I gave you the tips. Download, sign up, put at least $500. Check out the investing tool. Check out the alpha tool. You might want to search Aston Martin. And then don't forget that Aston Martin has its own ticker symbol. You might want to search that as well to be able to find those 3 cars. So like I said, this giveaway is going to be ending very, very soon. So for anyone, hey, it's a free giveaway. You might as well throw your hat in, you know? You might as well give it the old college try. Anyway, folks, that's what I have for you. Happy Friday, TGIF. I hope you wrote this down. I hope you're able to ride it all the way back up. I hope you make a shitload of money. We will be posting an update video on Sunday, and then Monday we'll be back to our normal streaming schedule. So no matter where you're watching, don't forget to like, subscribe, turn on those notifications. It very much does help me out. I'm going to go hang out in the Discord. Maybe we can make some money there. I'll catch you guys on the Flippity Flip. Have a beautiful weekend. And for anyone who's a football fan, I hope your team wins the season opener. Thanks for all the good vibes. I'll catch you later. Love you all. Bye.